DeFi for You is out to change the financial landscape. In doing so, we're going to help small and medium-sized businesses gain access to capital that banks have refused them. Pawn is one of the oldest and most profitable financial service known to us. DeFi for You is bringing this industry out of the shadows and into the light. Thousands of SMBs have stock they can't finance. They've been hung out to dry by the banks. DeFi for You will let them use that as collateral for a loan. Our team includes the founder of Traveler and the creator of BeerKey, as well as bank advisors and financial coaches. We know regulation is coming and we're going to be ready for it. The banks have failed us. The titanic e-commerce giants have too much power. We're here to disrupt. We're here to smite the titans. Visit DeFi for You now to be a part of the next chapter of decentralized finance. Don't be left behind.
everyone. As usual, today with us, with you, my dears, Sergey Sivantyan, mastermind of Think Tank Community, and
Catherine Ross, managing editor and video host of
today with us, with you, my dears, Sergey Sivantyan, mastermind of Think Tank Community, and
Catherine Ross, managing editor and video host of Benzinga Crypto. We are excited and grateful that you're guys here with us today. Today, again, as what yesterday, is going to be hot. We're having an amazing speakers that will be talking about the most important topics in DeFi, cryptocurrency as usual, and NFTs. So you don't want to miss it out. I'd love to say just a couple of people that we're gonna have today is MetaMask, Next, AAVE, DeFi4U, Netflix, 1inch, The Graph, Solana, Rocket Fuel Blockchain, NFT Artists, Fuse.io, Crypto Artists again, Shisha Finance. I hope I'm pronouncing that it's right because it's not very legal. Shisha Finance, Sandbox, and IOHQ, which is co-founded by Charles Hoskinson, which is also a co-founder of Ethereum. So, and I also would like to remind you that this is broadcasted in different languages, which is super cool. Thank you, organizers. We would like also to remind you that those people who are lucky enough to have purchased the exclusive participation package today, June 11th, it is a June? Yeah. There will be a random drawing of gifts from the sponsors of the summit. Sergey?
Yes, and I see that the general sponsor of the summit is Daisy Company, and today we'll host a representative of such top projects too, as you mentioned above, AAVE, DeFi4U, IOTA Foundation, 1inch, Rocket Fuel Blockchain, Solana, Fuse.io, and Carl Martin, also the influencers. As she said, it will be very hot with speakers, with keynote speakers, and starting from Valeria Minaeva, then Anatoly Yakovlenko, Adam Chapin, Dave DeFidger, of course, panel discussion with Stani Kuleshov, Anatoly Yakovlenko, Carl Martin, The Moon, Valeria Minaeva, then keynotes with Evgen Tripathi, keynote with Peter M. Jensen, Isaac Rodgin, and the final panel discussion with Peter Jensen, Isaac Rodgin, Mark Zeller, Saeed Hareb Al-Darmaki, he is from Shisha Finance, and Eloisa Manchesoni. I want to remind you, summit organizers are Digital Summit 2021. General sponsor of this summit is Daisy Company. Diamond sponsors DeFi4U, sponsors Nice Cash Desired, summit partners DAO Consensus, Since Wallet, Mango Trade. If you're ready, let's go.
We're going to have our first speaker.
Ladies and gentlemen, our first speaker is already with us. She is Valeria Minaeva, and now going to represent interesting and very, has huge imagination on market, 1inch company. Valeria Minaeva, this stage is yours. Go ahead.
Thank you so much, Sergey. Lovely to catch up again. My name is Valeria, and I do partnerships and strategic comms for 1inch Network. A brief overview, we are a distributed network for decentralized protocols, doing the best and protected operations in major blockchains. So without further ado, let me go into my presentation. The name of it is Liquidity Bootstrapping for Projects 100 to 100,000 users. And here's a little overview of what we will be discussing today. Is various liquidity bootstrapping opportunities, what, when, and how. Then I would like to highlight the 1inch liquidity protocol itself and showcase some of the use cases we've had previously with projects for liquidity bootstrapping, and end it all with a summary. So despite being, as some might say, in the bear market, which is not my personal opinion, I still believe we're in the bull run. The industry has gone tremendously and is developing really, really fast at a rapid speed. And we see many new projects entering the market. And for that reason, we see a lot of investments as well. And as you can see, this report by Cointelegraph, it actually showed that in the Q1 of 2021, the crypto industry got more funding than in all of last year, which is huge news and is amazing. And of course, for new projects that are launching their tokens that try to attract capital, liquidity is super important. What they need to do, they need to attract the liquidity providers. And for liquidity providers on their end, what's their interest is that they are looking to build on their capital, to increase their capital. And there are many ways for projects to basically attract these liquidity providers. And I will go through some of the ways at least. And it's amazing to see how crypto projects went through these multiple cycles trying to seek the right way to build those finance operations and attract investments. And as the industry develops, we see more and more ways for projects to bootstrap this initial liquidity. And just once again, crypto has remained one of the best ways to attract capital, and the 2017 and 18 ICO boom has really showed the true power of crowdfunding. However, all of this came with lots of problems, as we remember the early pioneers, that the tokens could not list on exchanges, and the whole success of the project would basically depend on whether or not the token can be listed on a reputable exchange. For that, project either had to pay very steep and high prices, or opt for smaller, obscure exchanges that often had hacks, and therefore their reputation was lost. However, now things are different, and with the rise of algorithmic trading, the DEX ecosystem, the IDO, we can avoid these problems. The Uniswap, being one of the most famous AMMs, automatic market maker, introduced this amazing formula, which is X times Y is equal K, where K is the constant, and it's therefore able to mathematically derive the price discovery. However, the problem for new project is that the algorithmic trading has problems with arbitrage opportunities, so the price can really be exploited, and therefore we came up with another term, which is bootstrapping pools that ensure smoother price discovery of the project. And one example, being probably one of the best and famous ones, is Balancer. Oops, sorry. Is a Balancer pool. It was actually introduced by them, and it's a reboot of the, as they name it, as a reboot of 2017 ICO into a new model, but without the worst that comes with the ICOs. And basically, it's a smart pool that has some controlled parameters that the team is able to control. And the idea of the LBP is to launch the token with low capital requirements. So that's really good for projects that do not have large amounts of funds in the beginning. The pool is being set basically with the two tokens, with weights initially heavily in favor of a project token, and then the scale can be calibrated to keep the price more or less the same or declining to desired minimum. The thing with the Balancer LBP pools is that you do not get into them early, because basically the whole system, the whole market is working against you. So you will probably lose your money if you one of those ICO get my token quick people. So the idea is to allow the smooth price discovery and let people wait and then buy at a fair price. One of the advantages of this exponential curves that we see on Balancer going down is to counteract this initial hype around the token release, and the programmed value drop actually discourages any price spikes and speculations, and prevents flash sales, as we see. Uniswap, I've mentioned before, it's probably one of the oldest models. However, it's not extremely efficient because the prices are once again set by the project team. Of course, there is a bias of how much your token is worth. So there is a lot of room for speculation there. There are other ways, such as the Polkastarter and DAO Maker, which are basically environments for projects to launch their tokens. However, you really need to think about this, because if you're launching on one of these, it limits the customers who can buy and participate in your token sale, because often you need to get whitelisted first, and then a lot of the launch pads limit certain consumers from buying, and that's not really what we're here for in DeFi. And then yes, so 1inch, actually not many people know, but it has its own liquidity protocol. We are quite famous for being a DEX aggregator, but there is a liquidity protocol as well. And we have completed some of the bootstrapping options with projects that have shown great success and like pretty good metrics. We did a program with Opium, Vesper, Tornado Cash, which was listed on Binance today. So that's pretty good news. As you can see, the partnership with 1inch can get you on Binance. Okay, and what's different about 1inch liquidity protocol, let's say to Uniswap, is that it has some really cool features like virtual balances, which protect users from front-running attacks. And also our protocol is designed specifically for liquidity providers. So if you're a project looking to attract those LPs, you should definitely consider the 1inch protocol, because the virtual balances capture more profit from arbitrage opportunities and gives them back to liquidity providers. So that's good. And then also everything is super transparent. As you see, we are a decentralized organization, and everything in our liquidity protocol can be regulated by people, by liquidity providers through voting. So you can adjust the fee structure and the price impact fees if you want. Any other pool parameters through our governance. And also 1inch has one of the lowest slippages on the market. So these are some of the insights I'm showing for the first time. They were internal to 1inch, and this is the program that we did with Opium. And as you can see, we managed to attract over 3,000 new traders to their project, and the trading volume was over 42 million, which is really good. And liquidity providers earned nearly 300,000. And the API for this was more than 100%. So these are just some stats that we did. And then another one, Vesper, also more than 300,000 new traders, and the trading volume even bigger, like 100 million with a similar API. So for new projects, these are really, really good stats, and they would not achieve them on Uniswap by themselves. And when we do these bootstrapping opportunities, we view them as big partnerships with 1inch. As you noticed, the presentation was named How to Get to Those 100,000 New Users. And it's basically through marketing opportunities that 1inch offers to these projects that wish to bootstrap on 1inch protocol. And as you know, 1inch is quite big in DeFi and has been growing by a lot. And our community across multiple online channels and social media is over 300,000 members and 422,000 active wallets and many token holders, which is a super exciting stats to share. And for projects that are just entering the market, getting this huge exposure, I would say is the road to success. Adding to those, the projects that decide to bootstrap with 1inch, we offer liquidity mining programs together. So for those who provide liquidity to those projects, we actually distribute a share of 1inch tokens as well to incentivize those liquidity providers and to enable more liquid operations in the space. So that's it. The amounts, of course, depend on the project that we're talking to, but we've done it with the couple and they have been super happy. We are quite picky in terms of who we partner up for those bootstrapping opportunities. And I wanted to share some of the criteria for projects that are interested to bootstrap on 1inch, just some general ideas on what we'll be looking for. if you're coming and would like to have this liquidity / partnership opportunity with us. Well, first, of course, is looking at the backing and where the project is coming from, its background, its investors. Of course, big name funds are super beneficial because it shows that they've already done their research. And so it's less work for us to assess the project quality and etc. So that's really good to have those on board if you're a new, smaller project. At least one like well-established with a good reputation fund is better than multiple other no-name people. And of course, the working product, we at 1inch are super against projects that do not have anything to showcase because, well, 1inch itself was just operating without any investments or any tokens for almost a year. And it had a working product already when we decided to fundraise. So working product is super important. Also some organic community. We do not expect like huge numbers and a blue mark on Twitter, but to show some interest and to see like real people using this real product is always great. And smart contract audits as well, super important, especially if you're a DeFi application. The more you can do, the better. Yeah, well, some other metrics just we assess from the blockchain. Yeah, that's it. And that's actually the end of my presentation. And thank you so much. I hope you had an overview, a small overview, because it's difficult to speak about every single option in 15-20 minutes. And you also understood a little bit of how 1inch liquidity bootstrapping works and what we offer projects and how you can be the next one we do this bootstrapping opportunity with. Thank you so much for listening. Yeah, thank you for inviting me.
Valeria, thank you so much for your presentation. One question though, any major announcements that we should expect from 1inch or any major news that we should be looking for?
Of course. Well, 1inch is constantly delivering, and actually there was one yesterday. I'm not sure if you've seen or not, but 1inch has finally released its limit order protocol, which is huge news, and I believe this will allow us to get much better partnerships and speak with institutions, because the limit order protocol is one of the big features we've been waiting for. So that's something just announced, and well, stay tuned for more. We'll definitely share when we come to them.
Awesome. So projects, look out. Check 1inch, and yeah, look out for major announcement. Thank you so much, Valeria. It was very informative.
Thank you, Catherine, Sergey, and Anthony. It was a great pleasure, and I wish you yeah, a successful event, and catch up soon on the panel.
Absolutely.
Thank you.
DeFi for You is out to change the financial landscape. In doing so, we're going to help small and medium-sized businesses gain access to capital that banks have refused them. Pawn is one of the oldest and most profitable financial service known to us. DeFi for You is bringing this industry out of the shadows and into the light. Thousands of SMBs have stock they can't finance. They've been hung out to dry by the banks. DeFi for You will let them use that as collateral for a loan. Our team includes the founder of Traveler and the creator of ViaKey, as well as bank advisors and financial coaches. We know regulation is coming and we're going to be ready for it. The banks have failed us. The titanic e-commerce giants have too much power. We're here to disrupt. We're here to smite the titans. Visit DeFi for You now to be a part of the next chapter of decentralized finance. Don't be left behind.
about to go on. And we're back. Thank you so much for waiting, but it actually was worth the wait. Here with us, the co-founder and CEO of the startup that is called Ethereum Killer, and the startup that says that scaling as one global state set it apart from Ethereum, Polkadot, and other rivals. And also the startup that has recently raised more than $314 million for its future development. Anatoly, hi. So we're so excited to have you. How are you doing today?
Great. How are you?
Awesome. So I think you can start your presentation, and we'll probably have questions afterwards.
Awesome. And we raised pi times 100 million. So just to be exact.
Okay. I'm writing it down.
Okay, so Solana is a high-performance blockchain. What does that mean? Well, it's we have processed since in about a year over 17 billion transactions. The steady state load is over 1,000 TPS. Our target block times are 400 milliseconds. We benchmarked this thing to 50 to 65,000 TPS. And these numbers are representative of all the hard work we put into optimizing a very, Byzantine fault tolerance and this thing called proof of history, which is an idea of using a clock or source of time outside of consensus. So this is unique to the design of Solana, and it's pretty fundamental to everything that we're doing. So why is any of this stuff as important? Well, the core piece of what differentiates a blockchain from a database is this idea of censorship resistance. It's as Balaji coined this term called the Nakamoto coefficient. It's the smallest set of participants that could collude to halt the network. Like any other layer one, no matter what the validators do, they can't steal your funds because your funds are protected by cryptography. But that's not good enough for markets and for trading and for DeFi, and really for what we believe was the core use case for these systems. Those participants that use these systems actually depend on the fact that these are reliable and that none of the participants can reorder information, can mess with the order flow, can monkey with the markets. And the only way to ensure that is to kind of grow the set. How do we maximize the set of individual validators that could potentially start messing with the system? There's no other way to do this besides using more signatures, more messages, more bandwidth, because that set at least has to be super connected. They all have to observe each other's information. And the only way to do that is with more hardware. Sharding's not going to do it. Subcommittees are not going to do it. There's nothing else that can actually maximize that set to thousands. So on our mainnet, you see that number 16, which is about 4 times an ETH2. On our testnet, where we get to experiment with dynamic staking and bots, that number's over 360. Still, same independent validators. It's actually, I think, even bigger now because our testnet is growing pretty rapidly. And our goal for this, we're just getting started, because it's only been 1 year since we've been live. Our goal is to get this number to 3,000, 4,000, 5,000, 10,000, because at some point, these systems are going to be in front of, the chief security officer at NASDAQ, the chief security officer at Bank of America. When they look at this platform and they see that the minimum set of independent parties that can disrupt their financial applications is 3,000, 5,000, 10,000. That's something that as an engineer at a gut level, you kind of understand, okay, this is really unlikely to happen, and I can trust the system. I can put more capital at risk. I can put my customers at risk there. So this is, to me, the most important work we could be doing for blockchain, is really focusing on censorship resistance and maximizing that set. Fundamentally, that's also the same thing that NASDAQ provides in their marketplace. You know, when I sign up my system, I go through all the regulatory hoops, I send my box over there. They literally give you a cable that's exactly the same length as everyone else's, because they want to guarantee that everyone that's in that building has fair access to the markets that they're running. And censorship resistance, you can think of that as a commodity hardware run by volunteers, open source software built by volunteers at a global scale that implements the exact same thing as those cables. So this is, in my mind, the kind of the cornerstone of finance. Those risk engines that all of the world's smartest market makers, they synthesize the world's information and they place that as a, you know, an order in a book. They put capital at risk. That's the cornerstone of finance, that those markets running. So we want to make this global, open, and free to everyone. So we built this little demo application, Break, and this is what we showed to the FTX folks and Sam Bankman-Fried like about a year ago after we launched. There's a lot of blockchains we were competing with. You couldn't really tell who had anything that was working or not. So Break is it actually executes a smart contract. You smash your keys, sends a transaction. When you hit your key, it lights up gray. When that transaction is confirmed, it lights up green. So we were able to demonstrate to them that this thing is live, it actually works, and it's fast, and it's feature complete. And that really what kicked off, I think, the explosion of development on Solana, was that once people played around with this, they realized that blockchain can be as fast and cheap as Web2. And we don't need to have compromises between, you know, decentralization, between giving people self-custody and building nice feature-rich applications and actually building this new world. So the most kind of popular use case, I'm sure you guys have heard of Serum. This was the central limit order book built by the folks out of FTX. This is a technology that is exactly the same as the central limit order book that runs NASDAQ, CME, NYSE, Binance, FTX. It's unlike an AMM, you have a real book, you have a price time queue, so orders are submitted by market makers and they're executed in this price time queue order fashion. And this thing is doing about 20 million transactions per day. Basically, I think 1,000 times more than Uniswap last time I checked. And it's been, it grew really quickly. I mean, well beyond our expectations. So right now it's still behind Uniswap by quite a bit, but it went from like 1 to 2 million volumes per day to somewhere between 50 to 100 per day. So in roughly 500,000 per week, 500 million per week. And this is enough already for startups to build second layer applications like mega markets that do margin and borrow lending, and like more sophisticated like things like perpetuals. So that cornerstone of finance that's on NASDAQ, we already see the same applications that are in traditional finance built on top of this that allow, you know, arbitrary number of people around the world come together and create lending markets and trade and borrow from each other. And we've been doing a ton of hackathons. I don't know if you guys have heard, but there's a ton of projects that came out of those, and a ton of projects that we ended up partnering with just to get the folks that want to build new applications all the resources that they need. And they kind of they've been covering every part of the ecosystem that's in crypto that we can imagine. So I hate comparing us to Ethereum because I've never really thought of us as an Ethereum killer. I always thought that we were a NASDAQ killer. We have bigger fish to fry than each other. But just so folks understand, does all the stuff that's on Ethereum exist in Solana? Yes, it does. We had one of the hardest parts to this is really growing these use cases with organic users. Nothing on Solana is Solidity based, so everything has to be rewritten and rebuilt with Rust. So these hackathons were teams that typically actually came outside of crypto. So about 40% of the folks that we polled said that they weren't out of crypto, and the people that succeeded build the products usually had, a ton of C++ experience, understood traditional finance. Some of them literally came out of like traditional finance firms like Citadel, Jump. And these financial applications that have been built are gaining a ton of traction. So altogether, it's 1.6 billion in TVL, and this is from stablecoins like USDC, USDT that have been minted natively in Solana. This is through the bridge from Ethereum or the Wrap BTC, and a bunch of other local native assets. Majority of the assets that are TVL'd are not sold. It's actually like USDC, USDT, which is pretty cool. Our last hackathon kind of really exploded out of the water. We had 1,000 registrations in the first one. On 3,000, that one had about 11 teams that raised over $1 million. This one had over 12,000 registrations from all over the world. So really seeing a lot of new developers come into the space. I think we actually have an advantage because we don't support Solidity. Most people outside of crypto have never looked at Solidity, and most engineers don't like it, just to be open. Rust has been voted the #1 favorite language by engineers on GitHub. People out of Microsoft, Facebook, Google have been developing in it, open source software with it for years now. So a lot of the folks coming into the space just jump right into Rust and build cool products. Some of the most, I would say this is maybe like the hardest challenge in terms of like business development for a new blockchain is how do you get your token as a standardized alternative to ERC20. ERC20 is really the established standard across the entire industry. But we have been hustling pretty hard there and pretty successful. A bunch of exchanges support this, a bunch of wallets, and that's growing really quickly. And one of our core goals is to have USDC, the stable coin, as fungible dollars on every exchange. So when you trade USDC, it's the same USDC. It's issued by the same provider Circle. And when you withdraw, you can pick which network you want to choose. And if one network is $50 to transfer, the other one is Tron, and the third one is Solana, and it's fast. I think we have a pretty easy chance of winning there. When I saw that like kind of the NFT world picking up, it really reminded me of my experience as a kid playing this game Ultima Online. This was in the 90s. You barely had internet. There were no digital marketplaces, but I remember going to a bank, getting a cashier's check, mailing it across the United States to somebody who then sold me some digital gold in Ultima Online. So this stuff, this idea that digital items have value, I think is very much ingrained in anyone that grew up playing video games on the internet. Because in my mind, like as soon as you have a bunch of people, like even not too many, like 10, 20,000 people all sharing the same state, like kind of all participating in the same party, just these economies form spontaneously. because we all kind of want to be ourselves, right? We want to show off trinkets and kind of collect the culture of those small little communities. And that's, to me, was always obvious in video games, but in some way, these systems that we're building are themselves a video game, right? We're all participating in this kind of giant experiment with its own economies. And as soon as you do that, art just kind of forms naturally. You can't really stop it. So I'm really excited about NFTs as a new form of a new medium for art. And also this idea of the metaverse, where artists that start building these artworks and the stuff gets popular. I think in the future, in my mind, if you're launching a game, you're going to want to include every user with NFTs in the planet, because that's kind of like your initial market. No one's going to want to skip that. So yeah, check out metaplex.com. There's a bunch of auctions. The really cool thing about this is that it's purely blockchain. We're using Arweave for storage. So Metaplex team, they built an Arweave integration. The first drop was like a 4 GB movie. It took him $3 to mint it. The auctions are all on chain. They're settled instantly. You can you can split the artworks and the royalties with as many creators as you want. And this is because the costs on Solana are so cheap. There's a bunch of different auction mechanics, like anybody that participates can get a participation NFT and things like that. So it's a pretty sophisticated platform built from the ground up. And I think if you use it, you will kind of start forgetting that it's a blockchain. And that's something that, like Blondish, the first artist that did this drop, she didn't even see the difference between this and like a normal Web2 platform. Like, it was working so well. So that's kind of part of the charm of building on Solana, is that you can actually build applications that users don't even experience as a blockchain application anymore. There's a bridge. There's a couple bridges actually. One is kind of wrapped assets by FTX for Solid, and Wormhole, which is a bridge built by our community, decentralized bridge that's got a lot of nice trustless primitives. But you can mint assets from Ethereum to Solana, and soon Terra and Solana, and really can work between any two smart contract platforms. As I mentioned, stablecoins are, it's really hard to fake stablecoins, because somebody needs to deposit $1 in the bank before this thing is issued, and that only happens on demand. There actually needs to be somebody that asks for dollars to be used in this new digital economy. And this has been really surprising to us that this grew so quickly. So over 1 billion total issued. And these are stable coins that are majority being used to trade on Serum, being used to market make and participate in Mango and Radium. In some ways, I think it's really hard to analyze volumes to understand, is one exchange with volume X as good as exchange with volume Y? Because cheaper fees means higher volumes. Are these volumes between the same market makers that are just bouncing orders between each other? Things like that. But stable coins, actual capital that traders need to put up in these markets, that's a fixed cost to them. If somebody has to borrow or get $100 million out of USDC to trade somewhere, they're taking a huge opportunity cost to not trade somewhere else. So because this is growing so quickly, in my mind, this is like a really strong indication that the volumes on Serum are organic, it's retail, it's people actually making important trades, and market makers are making money. So this is a really healthy sign for a growing financial ecosystem. So thank you all. Happy to answer any questions.
I do have a couple of follow-ups. I know that you've said that you hate when everybody compares you to Ethereum, but with the Ethereum 2.0 update that is supposedly going to happen this summer, but we never know, do you think that blockchain is going to scale faster and better, that it might be a competitor to Solana?
So the two things that we're really working on that Ethereum is absolutely not is this, right? Maximizing that minimum set. This is already bigger than an Ethereum shard. And it's a fundamental difference in design and I think optimization for a specific use case. So I think there's nothing wrong with what Ethereum is doing. Ethereum is building a chain where you have a very long tail of participants that run validators. And their hope is that this very long tail kind of watches a more concentrated head, where you have 4 or 5, staking systems like Binance, like Kraken, Lido, that control over 33%. And this long tail of 1,000, 10,000, 100,000 participants, because they're all processing the same data, can kind of be this very, very giant pager-duty system that can notify people when that small set does something wrong. And that's okay. There's nothing wrong with that. I think that's a point in the Pareto efficient curve. But I believe that for central limit order books, for trading, for high frequency trading, that's not going to work because performance is going to be much, much worse. And as a trader, right, as somebody that's building traditional financial applications, I don't want to rely on this watchtower. I actually want to rely on some hard guarantees. So I really, our seed level slides literally said Solana's blockchain and NASDAQ speed. This is the use case that we really built this thing from the ground up on. It's not, we don't really care about whether it's money or not. I don't care if it's a store of value or not. What I want is a price discovery engine, right? Where information is synthesized around the world. That's the use case that Solana wants. And everything that we're designing is to be the best there. Information that is submitted to Solana is propagated around the world at speed of light through fiber. This is really what the system is designed, so there's no interruption. As soon as you submit that data into the network, it starts propagating around the world. That speed is the same speed as news. So some important event happens in Hong Kong and Moscow, that news wire travels speed of light through fiber to a trader that's looking at the Bloomberg terminal. When they look at a market in New York Stock Exchange or a market in Solana, the price is already reflected. So we can actually go to the people that are market making on NASDAQ and NYSE and tell them, for all the important trades, the system is as fast, but it's 1,000 times cheaper. That you don't have to pay NYSE 10 billion a year in fees. You don't have to pay CME 10 billion a year in fees. You can go trade here and own this, right? It's open. It's open at the fundamental level, like the ownership level, because it's a decentralized network. And I think that's what who cares about Ethereum at that point? That's sorry.
Fair enough. Okay, my last question, because we really have to go. So the recent funding round that was led by Andreessen Horowitz, Polychain Capital, right? Where are you planning to spend that money? Like on what? Is it just to scale the technology or team or anything like that?
So you can think of, like the difference between the Linux kernel and Android. A lot of people built the Linux kernel. It was really hard, but there's an enormous 5,000 group at Google that's working on Android. The cool thing is that we don't need 5,000 people. We need to build an ecosystem where that many people are participating and building out the actual kind of application layer. And I don't think Ethereum's accomplished this. I don't think anyone else really built this to that level. So our job with these funds is to really start accelerating this ecosystem growth, get as many devs around the world, start building products, really focusing on this idea that if we unblock them at the hard parts, at the, you can think of like the bottom layer, the blockchain, the smart contracts as like Linux kernel drivers. If we unblock them there, these folks can start building applications that target users, that they can go to market faster, they can start doing that product market fit loop and onboard users to these trustless systems. And, I believe it doesn't matter where a user comes into the space, how they switch from centralized exchange to MetaMask or or to a fandom on Solana, once that happens, they're part of the entire crypto ecosystem. So this is an overall good for everyone. So in my mind, like, we have like 30 million folks, right? I think maybe that can do self-custody. I don't know if you think, I think it's probably even lower than that. I think most of the participants in crypto are just holding on a centralized exchange or Coinbase. But if that number, our goal is to grow that number to 1 billion users. So if we go from 30 million to 1 billion, the entire landscape changes. That's really our goal.
Thank you. Thank you so much for your presentation and for sharing your plans to us. And we got to go now with another speaker waiting.
Okay.
Yeah, thank you so much for being here with us.
Thank you. For sure. Bye.
We're about to go live.
Ladies and gentlemen, we are online here with you and with Adam Chapin. He is going to talk about how to bring physical asset to blockchain, how hard NFTs will change the DeFi space. And I want to remind you that he is the CEO of DeFi for you, or maybe for us. Yeah, Adam, your turn. You are welcome on our stage.
Great, nice to be here. Hello, everybody. Just to let you know where I am, I'm in deepest, darkest Vietnam with the development team at the moment, which is nothing like you think it is, because it's a very, very new country with some great developers now. So we do most of our development here for all our blockchain sort of programs and our platforms. So happy to be in Vietnam, but we're also a UK company, so everyone's clear on that, and FCA registered in the UK. Because obviously it's seen as a more credible company. And I'm from the UK, and that's where we get our licenses from. So good evening, that's a little bit about me. Right, DeFi for you. As the name suggests, okay, when I first saw DeFi, and I saw the lending patterns of it and how it was put out there, I thought it had a few problems. Not horribly, I'm not attacking it, I think it's a good idea. But in Vietnam, for instance, if you want to get a loan, from a bank, you must go to that bank and you must first prove you don't need that loan. All right. So the only way you can get finance in Vietnam is to prove you don't need it. So if you want to get finance, and they do this in Vietnam, all right, you want to get a loan for $100,000, you have to deposit $100,000 in their bank. All right. and then they reissue that money back to you with interest. So that's how far behind the Vietnamese system is when it comes to loans. So DeFi is a great tool for the future. It's only just getting started. So we put this together for normal people. So people like me can lend to people like you. All right. So it is centralized, because there's no such thing as totally decentralized. If you look at lots of projects, they all go through a central blockchain, and there is a centralization of anything. So there is centralized, but you can become your own bank. You can loan, you can borrow, you can set your rates, you can set your own, if you like, standard for loans as well against it. So it's quite it's a complicated bill, but it's very easy to understand. So the first problem is finance for the little people like us, all right? The normal people, right? The people that aren't multimillionaires and just get a loan online. Money, obviously, in a system needs to come from somewhere. So let me talk about that first. If you come onto the DeFi platform and you decide to set up yourself as a bank, really, for a better intensive word, you need to create some form of liquidity, and you'll have to buy in, but I'll get that to later. But the problem we're trying to solve here is the centralization of banks and the problem that causes financially for lots of other people. And if you can build your reputation up on a blockchain now, irrefutably, over time, you can then, if you like, have a credit check against you before anybody lends you money, but you must first do that. So first problem, there's lots of people out there now who are going to be having their NFTs, and they're worth X amount. Let's say they're worth $100 for your NFT. You bought it. It sits there. You hope that it goes up in value, obviously. That's what you bought it for. But rather than it just sitting there, we're going to let them use that NFT as collateral to make a loan against. So whether that NFT is art, okay, whether that NFT is property, whether that NFT are carbon credits, we will assess what we think we can loan against that particular product, and there will be a loan made through smart contracts online. So NFTs, everyone talks about art, all right? There obviously is a massive art market, right? Now, one of the big problems with crypto is obviously, as we all know, especially the last 3 weeks when Elon Musk farts, the market changes, right? So we're trying to get away from that massive wave of up and down, all right? And the only way to do that, in my humble opinion, is to make the NFTs hard NFTs. Now, there wasn't a name for hard NFTs. I've sort of come up with that, but it's NFTs against real world products, all right? So let's give you an example. If you want to buy land in Mayfair, and you want to buy a square inch of land in Mayfair for $1 million, it's probably out of your pocket, all right? But 10 of you could probably join together, buy that land in Mayfair using NFTs, all right? And then when you come to sell that land, you obviously get a lot more money, because the higher the value of the product, the land or the property, the more it goes up by, all right? Most property goes up by about between sort of 6 and 8% maximum a year. High value property and land goes up between 25 and 100% a year. But we can't get involved with that because we can't afford that initial in. But if there's 1,000 of us buying in off the NFTs, we can. Now, when you own that NFT, that little piece of that land, if you will, you can keep it and wait for it to go up, or you can then use that again to leverage a loan against, right? So a hard NFT has a value, like USTD has a value, right? USTD has a real value, therefore it fluctuates maybe 3 to 6% on the market. A hard NFT has a value. Now, this is the crazy thing. If you've got a land NFT, and we're actually setting up the technology to do this, I think we're the first people to go live with it very shortly. So you've got a land or a property NFT set up, and you've bought into that. You can actually use that as collateral to get your loan. So it doesn't just have to sit there doing nothing where the property or the land goes up. You can then use that to borrow against. Do you get that? Is that clear? I've got them faces going on. Right, let me start again. Right, if you go and buy a picture, let's go back to pictures, okay? You buy a picture, all right, and you put that on as an NFT, it's a digital picture. That may go up in value, it may go down, but it's highly volatile. We can agree that, right? Now, at the moment, the volatility is hard work. Yes, there are winners and yes, there are losers, but what we're trying to do is, if you like, bring in a real world value into the blockchain, all right? Because at the moment, all we're doing is speculating on certain programs and blockchains. If you own a slice of land in the UK, in London, all right, it's not a guarantee that land's going to go up, but it's certainly a lot safer of a bet than buying into some new currency or a new program. So hard NFTs, whether it's land, whether it's property, whether it's carbon credits. I mean, the list goes on forever. In my opinion, are very similar or much safer than the usual buying and selling of the cryptocurrencies. Because the worst scenario when you're investing is what you've got to look at is what would it go down to? So if you buy in for $1 and the lowest it's going to go down is $1, you've indemnified yourself against a lot of pain. So it doesn't fluctuate the same, but NFTs will trade, in my humble opinion, far in excess of the value of the land or the property or anything that you put on there. Okay, that's a speculation on them. But the worst scenario is if you have a hard NFT, and I don't know what the word is for it. We're using the word hard NFT, real world asset, if you will. At least then you have a no go below line. At the moment, I'm watching some of them go online and losing 80, 90, 100% of their value in minutes. So if you bring a real asset as an NFT to a platform that people can use to loan against or they can buy into, they then have the ability then to finance themselves from that NFT. Clear so far? Yeah? I've got one okay clear. I've lost you down below there. The good looking one. Okay. Right. All right. NFT is an art. Everyone knows how that works, right? NFT is an art. You have art NFT, you have a digital NFT, it's a digital print, it's recorded on the blockchain, and it has a value. People might spend $1 on that art, or they might spend $100 million on that art. That's up to them. All right. Now that art may hold its value and it may not hold its value. And my guess is, and don't hate me for this, a lot of the art that's being bought at the moment, and it's a guess, isn't going to have a huge value in the future, and a lot of that art will crash. Not all of it, a lot of it will crash because we're in the golden bubble. All right. I think for real investors, and I mean like company investors and savvy investors, not people that want to just shing and roll the dice, I think they're looking for something a bit more stable. I know this because I'm older and fatter, all right, and I speak to our market. And most of our, what we call angel investors in our project are sort of 55 and 65, have wanted to get involved in crypto, but they just saw it as it's just too up, too down. I mean, even Bitcoin, you know, that can lose 50% in a couple of days. Look at the last sort of 3 weeks. It's been a bit of a disaster for crypto. I'm sure we'll recover, but the more savvy, older investor wants something more long-term. They're not looking for a 2-minute buy Shiba coin and out again. They want to be able to put their money in, see where that money is, how it goes up. They want to trade against it and loan against it. So the NFT is almost the final evolution of not all crypto, but of money, online money. All right. So all it is hard assets instead of just digital assets. And then you record that on a blockchain. You own that. All right. You can keep it to the side. You can use that to loan against. All right. And what you're obviously hoping is that it goes up for more than you bought it for. All right. But you can loan against it. When people acquire real assets, they don't cash them in all the time. They loan against them. That's how banks have such leverage in the market. We, the smaller people, are forced to sell our assets. We've made our dollar, we sell it, we're out the market. This way, our assets gone up, and we can borrow against, lend against our asset without breaking out the market. It's a big one. It'll make a huge difference. If you understand how lending works and how hard it is to get loans in places like Asia, which is very hard, it opens up a whole new set of doors for international investors, and there's plenty of money here. Asia's not they're not all walking around with straw hats on. We've had we've been offered billions of dollars for liquidity on the platform. So long story short, a hard NFT, and I don't know what the word is for it. I just use the word hard NFT. A hard NFT, real world asset NFT, is a bit like the Tether coin, if you will, but with more chance of growth. You'd expect property to go up. You'd expect land to go up, you'd expect carbon credits to go up. It's not a guarantee, but you'd expect it. Now, rather than having to get that NFT and sell it when it's gone up, which is what most of us do, then we're out of the market and we're looking again, we use that leverage to loan against, and it stays there. And then you take your new money and you find a new project, and some work and some don't work. But you don't affect your first project, you don't kill it, and you can build up a real hard world asset, all right, against whatever you want to own. Now we think, we're not sure, but we haven't seen yet. We think we're going to be first to go live with property NFTs. and we're looking at between July the 4th and the end of July. So that's a very brief sort of look at what hard NFTs are. I know it's new to the market. I'll wrap it up, but in our opinion, it's a bonanza for fractional ownership, and everybody can have a seat at the table, not just the rich people. Okay?
Thank you, Adam. Thank you for your interesting presentation and good ideas coming to the market. All of us clearly understand that NFT markets can be now as treated as collateral, as you explained, and tries to bring a little bit more value than only speculation. Thank you, Adam. See you again on our next panel. Okay, bye.
Thank you, Adam.
Okay, ciao for now. Bye-bye. Bye-bye.
We're back. Thank you, everyone, for staying tuned in. We have an amazing guest who's going to talk about DeFi, smart contracts, and NFTs with IOTA. Yeah, with that IOTA. So Dave D. Fighter, Senior Architect at IOTA Foundation. Welcome. Thank you so much for being here with us. And I'm sure you had a lot to tell and a lot of to speak about. So we're just going to go ahead and let you take the floor.
Cool. Thank you, Catherine. Yeah, it's a lot to talk about in 20 minutes. So we'll skip a few parts, but it will be fine. Cool. Thanks you all for having me here. My name is, like I said, Dave the Fighter. I'm a senior architect at the IOTA Foundation. And I will tell you a little bit about what IOTA is, what the IOTA Foundation is, and also how DeFi works and NFT works or should work with IOTA. So let's get started. So the IOTA Foundation in the first place is a non-profit foundation founded in Germany. We have over 130 people working with one shared vision to support the IOTA protocol development and education about IOTA. We come from all over the world. We're a fully decentralized organization. It's a really great team to work for towards building a new protocol that's fundamentally different from what's already out there. So IOTA is a protocol which is like blockchain, decentral and immutable, but it's different in a way. It doesn't have any blocks. It doesn't have a chain. It only has transactions. So it also doesn't have any miners. So this makes it fundamentally different from a blockchain. So if you look at the image on the left, you see a traditional blockchain where you have transactions clogging up in a mempool. They're added to a block, and the blocks are added to the chain over time. And if you have more transactions than that fit in the block, with the delay between the transactions, then you'll have clogging up transactions, and they have to outbid each other for a position in the next block. And before you know it, you end up with a DeFi transaction of $600 for a simple swap. IOTA is different in that way because we attach transactions directly to the network. If you put a transaction on the IOTA Tangle, you reference 2 to 8 other previous transactions and confirm them. This way, you don't have this bottleneck of having to create blocks. Every transaction can be put on the Tangle, and you can attach it to several other messages. This allows you to have a lot higher throughput as a standard blockchain, and it's also easier to shard this in the end because you don't have serialized transactions in a specific order. But yeah, it's a different concept than blockchain, but it has a lot of similarities when it comes to validation. So we started out with IOTA several years ago, first as a beta version, which was had some very interesting but futuristic components in them. We're now at a more mature version, which allows several hundreds TPS, and we're working towards our IOTA 2.0, which is like a complete new version, production-ready version, fully decentralized and ready to gain mainstream adoption. So yeah, like I said, the previous version of IOTA, which ran from 2015 to 2019, had consensus via a coordinator. It was all very much I would say a research prototype even. There was a transaction format which used ternary instead of binary encoding. This was looking at the most efficient way to do Internet of Things. It's theoretically more efficient to do it like this, but in practice, it will take a long time before all hardware adapts to this, and you need a complete chain of the whole flow to adopt that standard in order for that to be proficient. So that was a bit too futuristic from our end, and we had one-time use signatures as well, within one-time signatures, so you were not able to spend from a single address multiple times without exposing part of your private key. All good for being quantum immune, but not super great for user experience. And there were some other design decisions that could have been better, but it worked. And we reached around 30 TPS, not too impressive. So last year we went to a complete rewrite of the protocol to be more more production ready. We switched out all the futuristic parts from more industry standard parts, like the fixed size transactions are now variable size. We use UTXO instead of account model, binary instead of ternary, more industry standard encryption as well, like ED25519. Our node software was completely rewritten in Go and Rust, and all APIs were completely redone. Client libraries, second layer products, really turning our network into something that is actually usable in a production friendly manner. You can read about this on chrysalis.iota.org. This is the current mainnet for us. And if we have a look at this, this is our current mainnet. And this is how a Tangle looks like for us. So what you can see here is a bunch of gray blobs, and those are the transactions coming in. It's not like a blockchain, it's more a organic process, and you see all the new transactions coming in currently at a rate of around 63 transactions per second. And all the blobs that turn green are confirmed and finalized. So you can see that if you put a transaction out to the Tangle right now, it will take maybe 5 to 10 seconds for them to confirm, and those are finalized. These are also truly feeless. So anyone can send 1 million IOTA, and the receiving end will always receive 1 million IOTA in the end. Or you can even send a transaction with just data, and you won't need to utilize the IOTA token on itself. So what we're working now towards is IOTA 2.0, which is the fully decentralized version of IOTA, something that we have been looking at for years. And just a couple of weeks ago, we launched our public testnet for this. It's a kind of a similar concept to delegated proof of stake. It uses a novel consensus mechanism called fast probabilistic consensus, which is like a peer-reviewed way of doing consensus, and a special concept called mana, where the reputation of nodes is being rewarded by the users of the network, and that mana defines how trustworthy a node is. We support smart contracts on this network as well as layer 1 digital assets and layer 1 NFTs. And there's a lot to talk about, a lot to learn about this. I don't have the time for this right now, but if you go to v2.iota.org, there's a complete explanation about how this concept will work, and also a demonstration of how everything works, instructions, a wallet you can already download for this testnet, and an Explorer. So that's pretty interesting to have a look at. But yeah, smart contracts. We're fairly late to the game when it comes to smart contracts, because we've mainly been focusing on the core protocol. It's a completely new concept. It's totally different from existing blockchain solutions. Of course, it borrows the concepts from it, but the whole structure is totally different. And we first wanted to make sure that we had a solid core that could run at several hundreds or thousands of TPS, confirmation in seconds, no transactions left behind. And we're currently at that point where we have that. So right now we're working hard on bringing smart contracts to IOTA, and also working towards IOTA 2.0 in parallel. These are separate teams, of course. IOTA Smart Contract Protocol is what will fuel our smart contracts, and it's a protocol on top of IOTA, which will allow you to run multiple chains at the same time anchored to the IOTA Tango. So you will actually have blockchains, several blockchains. Everyone can spin up an own blockchain and anchor that to the IOTA Tango, because you need the ordering of a blockchain. We don't do it on the first layer, but on the second layer. But we support multiple virtual machines. You can run Ethereum virtual machines on there. You can run WASM-based virtual machines on there. If you want to start your own chain, you don't have to buy it. You don't have to auction it. You can just start your own chain, define the rules for it, and get your validators in, and basically run your own network protected by the layer 1 IOTA. Yeah, I think it's a really cool concept to have the option to allow these parallel chains next to one another, and also be able to let them communicate with one another and with the layer 1 IOTA protocol. So if you look at this from a perspective of architecture, on the left you have a regular smart contract, which is similar, or a regular blockchain based smart contract state machine, where you have several smart contracts in a chain state, and that's about it. IOTA Smart Contract Protocol actually is the bigger part of this. So you can have a EVM chain here, and another EVM chain here, and a WASM chain here, and they can all work independently. They're all connected and protected by the layer 1 IOTA Tango by anchoring their state every block to the main IOTA Tango. And they can communicate with one another as well asynchronously. So you have the option to communicate with other chains right away or through the layer 1 Tango. And that makes it a little bit different as several other solutions, but also very powerful. So regarding DeFi, like I said, we're fairly new to smart contracts. We're working towards bringing out smart contracts to our testnet very soon. So we don't really have any DeFi on IOTA right now, but we haven't forgotten about DeFi. We've noticed all the trends there, and one conclusion we made is that we have to support EVM as well on the IOTA Smart Contract Protocol. This is not a problem because we support pluggable VMs. You can run any VM on there which you like. But yeah, the current ecosystem is fully based on EVM-based solutions, at least the bigger ecosystems. Everything right now in terms of DeFi is on either Ethereum or Binance Smart Chain or any other EVM running platform. And to allow these platforms to have a look at IOTA as well, we need to support that too, to at least give an impression of what IOTA can do without them having to invest a lot into learning a new programming language or new VM, or start learning functional programming, for example. This EVM compatibility is, of course, fully the same as Binance Smart Chain, Ethereum. You can communicate with the network through MetaMask, Hardhat. All the tools are available. So that should be fairly easy to be adopted. And at a later phase, we want to add support as well for direct interaction with layer 1 assets on the EVM layer. So there we actually add functionality to EVM or to our EVM smart contracts that are not available right now in Ethereum or Binance Smart Chain, like asynchronously addressing other chains or addressing layer 1 assets that are not the main asset IOTA. Like I said, you have a lot of flexibility in these chains. Everyone can start their own chain. It won't cost you a thing. You just have to start it up and define the rules for it. You can make it private or public. It doesn't matter. You can have a private chain where every participant in the chain is known and has limited access to the smart contracts in the chain, but it's still guarded by layer 1 IOTA protocol, by hashes of the state of the chain. So you can have best of both worlds. You can have a private chain anchored to the public Tangle. But if you want to run a public Ethereum chain, you're free to do so as well, as long as people trust your validators. Apart from that, we also support the WASM-based smart contracts, and later on maybe other VMs as well. It's fully pluggable. But in terms of adoption, we think this is the fastest way to attract a full ecosystem and let them explore what's possible with IOTA. Another thing that's a cool tool to have with IOTA for the DeFi ecosystem and NFTs is that we have digital assets on layer 1. So if you look at Ethereum, Binance Smart Chain, almost everything is a ERC20 or ERC721, just a smart contract with some state. They're called tokens, but it's just a smart contract with some state, right? Well, with IOTA, you have an option to choose between using native digital assets, which are basically rebranded IOTA tokens, first-class citizens, or using ERC20, ERC721 smart contracts in the EVM smart contracts. You have full freedom to use these. The native digital assets have some cool features that the ERC20s don't have. But if you just want to use your existing smart contracts from Ethereum or Binance Smart Chain, you're able to do so. But you don't take full advantage of the native digital assets. The cool thing about those things is that they are on layer 1 and you can use them without any fees at all. So if you want to move your NFT or if you want to move your tokens, you don't even have to buy any IOTA or whatever. You can just move them over to someone else. There's just no custom functionality in these digital assets, but you can delegate them to a smart contract so that the smart contract takes ownership of those tokens, similar to how a farming contract takes ownership of a coin, for example, on Ethereum, and basically delegate the access so you can do advanced stuff with these first layer native digital assets. And it's super easy to use these assets as well, to mint them. If you just want to have a simple token with no custom functionality, anyone can do it. It's even integrated into our testnet wallet. And the same thing goes for NFTs. NFTs are first-class citizens as well on our layer 1. You can create and mint your NFTs there, no fees attached. Add some metadata to them and decide if you want to delegate them to a smart contract or just want to keep them in your own wallet, protected by your own private keys. So I think that's a pretty cool and exciting feature that we can offer. That's a little bit different from the existing ecosystem. And this is currently already available on our IOTA 2.0 testnet, which will vastly improve over the next coming weeks and months. The first version of this came out 2 or 3 weeks ago. We can actually have a little look at this right now. So if we go to v2.iota.org, we can see the testnet live. This is the coordinatorless testnet, so it looks a little bit different. And we can look in our Explorer, we can see all the transactions come through. There's also a decentralized random number generator in here, which can be used for all kinds of interesting DeFi use cases, where randomness is of use. This has not always gone very well in the DeFi ecosystem so far. So hopefully we can improve something there as well. And we also have a coin registry here where you see a whole bunch of custom minted tokens. And it's actually very easy to make these. I have the DevNet wallet here. As you can see, I already have some tokens on my own. I can send them over to other people. I also have some IOTA in here. And now I can basically just say, create an asset. I'll call it conference token, conf, and let's make it a nice amount. And it now creates a transaction, and there we have it. We already have a conference token available right now. If I look at the Explorer, it should pop up any moment here. Yeah, there we have it. So I just made a native digital asset on the IOTA 2.0 testnet. No smart contract development involved, no smart contract development needed. If this is what I want, a simple token to spread my shares or whatever, it takes 5 seconds in a user-friendly way. And if you want to do any more advanced stuff, you can delegate this to a smart contract, or you can implement your own custom logic, but that's more advanced. So the narrative for DeFi on IOTA. We have finality in seconds, just 1 block confirmation times needed for finality. It's compatible with the existing Ethereum ecosystem. You don't have any fees on layer 1. The fees are definable on layer 2. So if you're a chain owner, you can decide, if you have a private chain, for example, to not charge any fees because you trust all the participants, not to break your smart contracts by issuing a lot of spam transactions. Or you can just make a gas-based fee like Ethereum has right now, but with a amount of choice. It's scalable and decentralized. Many chains can work in parallel, and this allows a lot of flexibility. And the native digital assets and NFTs really make it a worked out version of DeFi on IOTA. So is this the future or home of DeFi? It's too soon to tell, but I think we have some really compelling arguments here to bring it there. And that's it for me. If you have any questions or comments or want to work with us, just get in touch with me on any of these accounts. And thank you all for your time.
Thank you, Dave, so much. It was very informative, and we actually love to have a little bit more information. So I'm sure if projects or investors or traders out there have any questions, they can contact you or any member of IOTA Foundation.
Right, thanks.
Yeah, thank you so much for the work and for the value that you are contributing to the ecosystem.
Thank you. It's a pleasure to work here.
Thank you. Okay, and next we have a panel, which you definitely don't want to miss.
DeFi for you is out to change the financial landscape. In doing so, we're going to help small and medium-sized businesses gain access to capital that banks have refused them. Pawn is one of the oldest and most profitable financial service known to us. DeFi for you is bringing this industry out of the shadows and into the light. Thousands of SMBs have stock they can't finance. They've been hung out to dry by the banks. DeFi for you will let them use that as collateral for a loan. Our team includes the founder of Traveler and the creator of DearKey, as well as bank advisors and financial coaches. We know regulation is coming, and we're going to be ready for it. The banks have failed us. The titanic e-commerce giants have too much power. We're here to disrupt. We're here to smite the titans. Visit DeFi for you now to be a part of the next chapter of decentralized finance. Don't be left behind.
Ladies and gentlemen, we are on here. Here it is, DeFi and NFT Summit. Now is the summer, but looks like it's really digital summer. We are online and live together now with us. Very distinguished people around the globe. And they are Valeria Minaeva. She is from 1inch and do partnership and community making on 1inch Network. And Anatoly Yakovlenko, CEO of Solana. Unfortunately, two people were waiting for us. We're waiting for them now, trying to join us. But now we have to start, of course, with me, my co-host, Catherine Ross. Catherine, if you would like to catch this up and start from one of the questions, you are welcome.
Oh yeah, for sure. I have a lot of questions to DeFi, honestly, but I think I would love just to start a conversation with how do you evaluate the state of DeFi right now? Is it just the very beginning and we have a lot of steps to sort of to approve and to go further, or we are in the middle and everything is booming? So I'd love to start with Valeria. What do you think about the current state of DeFi?
Sure. Well, for me, I believe DeFi currently is largely institutional and happening at the institutional level. There are a lot of money locked in contracts. It's difficult to keep up, actually. It was like 65 to 88 billion, and the yields are like phenomenal. And well, I believe it'll be like 500 billion and more by the end of the year. So in my opinion, it's really the beginning, and it's still away from like retail and normal people using it. So that's my take on it.
Anatoly, do you agree or do you disagree?
Yeah, to give you some perspective, a single trader in traditional finance lost 50 billion. At the time, I think that was the size of the entire DeFi. So a single trader in traditional finance created a loss that was the size of all of DeFi combined. So we're in super early stage. I tend to not think of it in terms of TVL because those numbers are kind of mark to market. That's not as important as the number of users that self-custody keys participate in these systems. And that's still like pretty small, 1 to 2 million MetaMask users per month is a pretty small number compared to hundreds of millions on Twitter, hundreds of millions on Facebook.
So just to your point about hacks and about losing money. So hackers just recently in May, at the end of May, hackers steal 7.2 million from a Binance Smart Chain protocol, right? So in DeFi, your assets are not actually protected. And if they're stolen, they're stolen. And then Bitfinex hacker and the hack itself that happened in 2016. So they just recently moved around 7.5 billion worth of Bitcoin. So what do you have to say about that? Because if you keep your money on a decentralized exchange, it's actually not that secure as a centralized exchange. So yeah, you can tell me if I'm wrong. But
yeah, that's kind of an incorrect view. People that throw their funds into unproven networks with unaudited smart contracts without any traction, they're taking a risk because they want that super early high yield. And that's where the risks are, right? That's where it's very likely that there's a bug. It's very likely that these systems are unproven. But something like Aave, something like Uniswap that have years of traction at this point and years of engineers looking at it, those systems are much safer than a centralized exchange. So it's open finance, right? It's open source. Everything is transparent. It's impossible for a trader to get leverage from 50 different places by hiding their exposure and then crash. That cannot happen on any of these systems. But if you ape into a contract that somebody just posted, you are taking a risk there because you don't understand unless you're the engineer that can analyze it.
For sure, but that was like Binance Smart Chain. It's actually a very trustable platform. Yeah, sorry.
Why is that assumption? Why
Binance
do you have
Smart
that assumption?
It's because of the brand. So it might not be as good as it is.
It's humans writing code. right? If it's people still building the software,
Yeah.
it's impossible. Brands are not the ones building software.
Yeah, sure.
So it takes time to build high quality software. It takes time for it to mature. It takes time for it to be proven. So like, just people need to understand that.
For sure, but then just to add to my point, the reason I'm saying that a lot of people not from the industry, but, and forgive me, TikTok influencers and Instagram influencers, they choose Binance Smart Chain, and just because it's easier to create a token there, not because Binance is more recognizable than any other platform out there. But Valeria, what do you think about all of that?
I completely agree with Anatoly, and surely it's a big risk. And like with the DeFi hype that we've seen, a lot of untrusted projects popping up, and people are completely clueless about them. They just see like some numbers and they're ready to put their money at stake. I think the key here for any project like looking to establish itself in DeFi is security, and security should not be neglected, because like once you lose your reputation, you probably lose like your whole project. So it's really important to do multiple audits for smart contracts, like as many as you can. Work with multiple companies, entities, review the contracts before releasing them. And I think projects are just really rushing in to like release some cool features and be on the hype without taking the time back and like reviewing everything, reviewing the code, and analyzing the risks. But of course, like this is unsustainable, and we've seen like the hacks and people losing money. But projects that are here to like build real DeFi ecosystems and here for long term, like at 1inch, co-founders are probably super crazy about security, and they do like multiple audits before making any product announcements. Well, security is key in DeFi, and that's how we're gonna gain the trust from smaller like retail traders when we stop seeing these hacks and etc.
Yeah, you've actually covered my next question that I was going to ask about due diligence. Sergey, you look like you have a question.
Yes, I'm also looking the chance to jump into this
absolutely
discussion. I'm sorry, I really love how Anatoly treat his approach to the blockchain industry. I really love that he do not fight with Ethereum. He fighting with Nasdaq. It's really cool approach. Yes, I really also looking for that process. It will be very cool to understand that finally that huge that huge, how I'd say, I just forget the right word, huge dinosaur somehow, I don't know, being jumped or be fighted. But actually, all the developers or the blockchainers trying to jump into this industry, first of all, looking for money. But second of all, as me, they are looking for chances, jumping in for the lowest fees. For sure, Binance Smart Chain or Binance Smart Chain give to all of us as the opportunity to jump into a little bit smaller fees, and of course with huge liquidity, not image liquidity into it. Anatoly, I would like to know, as your perspective, Solana gives us not only development, very huge on a highest level, being comfortable for developers, for programmers, as Rust, because Rust as developing language, yes, a little bit higher levels and much more affordable from all of us. But what about the compatibles with EVMs? I'm talking not about Ethereum virtual machine. I'm talking about Turing code. What's your perspective? How the people can be engaged in?
If I understand your question correctly, you're asking how can people Ethereum like developers can engage with Solana, like use
people as developers trying to engage in, and of course the people which are looking for money and try to use it much more less fees.
So there's bridges. So you can use Wormhole Bridge, which is trustless. There's an FTX bridge where you can move tokens from Ethereum into Solana. Binance had an interesting mechanism where you could move liquidity out of Binance directly to Binance Smart Chain. Because so much Ethereum liquidity is already locked up there, it was very easy for Binance folks to just go try it. What I suspect is that most of the liquidity on Binance right now is actually coming from Binance itself. Some is from Ethereum as well, but you didn't see, Uniswap volumes drop by the same amount that PancakeSwap volumes were rising, right? So that tells me that a lot of this is coming from Binance itself. You can do some of that from FTX, and a lot of traders really like Serum because it has the same look and feel as FTX. So there's multiple pathways to get your assets into Solana. For devs that are on Ethereum right now, the folks that we see jumping into Solana are more coming from Chicago finance, seeing like they want to build more sophisticated products that you just can't do on Ethereum. It's really hard to build, central limit order book style perpetuals or futures, options. You just need, the data structures are bigger. You need more memory, more performance, more bandwidth. And that's not even a question of Ethereum versus Solana. It's more of EVM problem, that the runtime, how Ethereum runs, is not designed for building an exchange or matching engine. So from that perspective, there's just different applications that are being built. Some of the more mature ones like Mango Markets, I suggest people go check it out. And it has kind of the look and feel of a, professional exchange with margin and kind of the same speed and execution, but it's totally trustless.
Starting from last year, so many DXs come into the market. Finally, they find a solution like Uniswap to bring the liquidity from the people to it. But the next stage is going to be also accepted or easy to use on some blockchain. Looks like Solana now tries to do that because so many market makers, so many transactions come into, and now Ethereum as platform not ready to do that, That's why for me, as 1inches as aggregator, also looking for that solution. Do Solana tries to substitute Ethereum somehow, or make so many bridges or so many, graphs or shards on it, or it's going to resolve another problem?
Well, we'll never have to shard. I can tell you that because design-wise, we're building on top of a highly parallelizable, scalable architecture. So every time NVIDIA, Intel, Samsung double the bandwidth, double the storage, double the number of cores available for the same dollars, that can be deployed on those validators and have twice the capacity. It's an exponential curve. People don't realize that 20 years ago, it was just as crazy to say that we're going to have 1 gigabit internet at home or in the palm of your hand as it is right now. Me saying that 20 years from now, we're going to have 1 terabit internet at home, right? That's like, exponentials move very slowly in the moment, but very fast over a short period of time. So this is, again, because I spent my career working on hardware and firmware, just something that I strongly believe and have had of experience firsthand. So for us, I don't think that we'll ever need to shard, and I want to grow the user base as fast as possible and actually get to some interesting engineering problems where we have to sweat a little bit.
Okay, thank you, Catherine. Maybe you're ready to refer the other questions to Valerio.
Yeah, I know that not a lot of people actually enjoy legal or regulation kind of questions, but because, DeFi market is not regulated at all. And we have statements, for instance, from CFTC commissioners saying that DeFi markets might be illegal in the United States at all. So how would you address the current regulation? And do you feel that there is a need? I mean, philosophically, it shouldn't be regulated at all, because that's the point. But how do you feel about the potential upcoming regulation, and what kind of regulation is fair with DeFi markets. Valeria, we'll start with you.
Thank you, Catherine. Well, a good question. Well, to me, the whole concept of DeFi is about freedom for everyone to have access to financial system not controlled by a centralized entity. And in regards to regulation, right now I really don't see a way, because a smart contract cannot be regulated. But I think we're approaching some, let's say, like a balanced way between DeFi and CeFi, because many projects are looking to help consumers, and to onboard consumers, you need some centralized tools as well. You need like fiat on ramps, and that like involves the QIC and regulation. So I would probably think that some DeFi would have a mix of like offering the DeFi tools, but also having some like fiat interaction with their customers, and that will be regulated. For now, yeah, as I said, the smart contract itself cannot be regulated, and yeah, we'll see how it goes.
Anatoly, where do you stand on DeFi regulation?
The purpose of regulation is to prevent fraud.
Yeah.
Right? It's to prevent consumers from getting screwed by somebody that's promising too much. And the problem with DeFi isn't that it's decentralized. It's that we don't fully understand where the risk parameters are. Like, you have a smart contract that's, you know, executing in Uniswap. That's a fully peer-to-peer system. But do consumers need to be aware that miners could extract value from their trades? That you could have, you know, time-banded attacks where enough hash power can start reverting blocks and steal your order flow, right? Where do we understand those risk parameters, and how do we communicate it to all the people using this? Because kind of the language that's coming out of DeFi is that these systems are truly trustless, your funds are safe. Well, there's details, right? So this is where regulators, who I personally believe from my experience is that most of these regulators are, you know, they graduated Stanford, Harvard, they're big policy wonks, they're nerds, they love this stuff, they want to build new systems where fraud is impossible, where consumers are protected. If you give them like a real solution that is truly analyzed to that level, that these are parameters, this is all the places where fraud could occur and consumers are safe, they would love that. We just don't see this DeFi is just not mature to that level where we understand everything. You know, like a price, you know, like a lending protocol that's using Chainlink to liquidate. There's potential for fraud there on the Oracle level, right? Like on any of the validators providing that feed on the aggregation level. So we just need to be really careful about what we promise, right, in these systems to folks participating in them. And we need to figure out how to, you know, convey all the risk factors. And once we get to that point, once this is mature, I believe that we'll probably see more specific regulation around open finance, around systems that have all this transparency, which is awesome. Like, all this transparency allows us to do these really amazing things with actually quite minimal amount of fraud right now. Like, Aave is managing $20 billion as a piece of software. That's amazing, right? Like, so a lot of the folks that are regulators see this as a ton of benefits coming from DeFi.
So I agree with you, and because to prove your point, actually, we've had a regulation from 1913 to regulate cryptocurrency until recently. The just newly appointed SEC chairman Gary Gensler, he was teaching blockchain as well. So, and he just recently stated that cryptocurrency are indeed securities. It took a while, but the regulation might be on the way. And I do have my last question. Maybe Sergey will jump in. As I'm sure you have looked at or used some sort of DeFi DeFi applications or platforms. So that's a funny question, but what is your favorite one and why? For what reason? To earn money, to trade, or just you like the technology and the idea behind it? So, Valeria, let's start with you.
Oh no, I was hoping it would be Anatoly first.
Hey, Anatoly.
What have I used, man? What I'm trying to think. What I thought was cool was the Mango Markets cap sale for their caps, because they use the same central limit order book that's like being market mated by like most sophisticated market makers like Jump Trading, but to do an NFT sale for something fun. And to me, that was kind of like one of those moments where you realize that the systems that you build today for finance are going to be used for fun entertainment, 5 years from now. The same exact code, the same exact infrastructure is really like everything that we do is financial, and it's really going to open up new ways for people to interact. So that was pretty exciting to me.
Okay, Valeria, your turn.
Yeah, I cannot really say something about like NFTs or other cool things, because I've been mostly using 1inch for my own purposes, and it aggregates, like if you need to buy something, you go to Amazon. If you need to swap something, you go to 1inch and you get the best rate for your swap, and also you can reach like any longer tail assets that you want. So I've been using that quite a lot as a consumer, and also taking part in some of the liquidity mining programs, but that was just really to understand how it all works when I provide liquidity, when I stake my LP tokens, because when I first entered DeFi, it was all a little bit confusing, and I can imagine for like a normal user, it must be like a challenge, it's like crypto is this level, but then DeFi is like a few steps above that. So that's me.
Actually, talking about UX, UI, and the entire experience with DeFi, I've recently interviewed NFT artist who announced her vocal art, and she used, so from a creator perspective, she tried to mint, and she actually did mint her NFT, and she told me that the entire experience was confusing and difficult and complex. And from a buyer's perspective, using like Nifty Getaway or OpenSea platforms, they are popular right now, but they're just almost impossible to use, right? So my question,
send her to Metaplex. Just it's awesome. It's already done. It's fixed.
Okay. So my question is, how do we, if possible, how do we improve experience that people are having with DeFi? Is it just about UX, UI, just a product management sort of thing? And have you personally minted or bought an NFT art?
I participated in the Blondish auction, and I didn't win, but I got a participation NFT for just participating in that auction. And the experience was wonderful because it was built on a platform that gives you a Web2 experience. You don't even realize it's a blockchain. So it's already done. It's done. Let's go.
Okay. Valeria.
Yeah. Okay. Me personally, I am not big on NFTs myself. However, I did claim some mystery like egg that's supposed to contain some NFT when
virtual egg, or is it
virtual egg?
Just chicken in.
Yeah. So when a lot of the projects do that, so like they attract users by giving away some like valuable NFTs and mystery boxes, and you can claim it just for the cost of the gas, and then like sell it for later. But that's also like some speculation and just.
Yeah, and just my last point, and I'm going to give the floor to Sergey. And a lot of gaming blockchain platforms, although I'm not sure why gaming needs blockchain in the first place, they also use NFTs to sort of incentivize gamers. Sergey, please, you can ask questions.
Yeah, dears, we have just I don't know, from 5 to 7 minutes left. That's why I would like to hear from you your vision. What's the future looks like? Future is not about DeFi, future of this industry, future of the blockchain industry as is, because we see that so many NFTs coming out. DeFi is changing the real fiat market. They are trying to do the same models, but in digital. I would like to start with Anatoly. I'm sure that you as a developer clearly understand where do we go. That's why you're creating Solana, killer of the blockchains.
We're not a killer.
Yeah.
So I think finance is kind of just obvious. It's almost like DeFi has product market fit. The people coming in from traditional finance know how to rebuild these systems and are just doing this really as fast as they can. There were 11 teams in the last hackathon that raised over $1 million building options, borrow lending, whatever, like every possible combination, and that's just coming. I think with DeFi, we know what we're doing. With NFTs, I think it's much more interesting because there's so many unknowns. A really cool project, Render, is a render platform that does ray tracing. You can literally think of that of that token representing a picture of the metaverse. That the amount of token that you have is a way for you to synthesize a scene in this virtual world that's infinite. And if that's an NFT, right? If those scenes become NFTs, then those worlds get created and come into existence, right? From the imagination of the artists and the people participating in those. It's just so much more open-ended how you combine that into human experiences. I think stuff that's really lacking right now there is better displays, better ways to interact with this. I don't have augmented reality glasses that I'm wearing and walking around through like the Star Atlas, scenescapes that they publish, which are awesome, right? It takes a lot of work for an artist to compose it. These compositions are new, right? This was, 20 years ago, this was like edge, like, the avant-garde of art was trying to build these 3D renderings and scenes that really take you to a different place. And now it's becoming more commonplace and consumer friendly. So I'm excited about like the human experience that all this stuff is bringing together. Finance is already like, we have the smartest people in finance already moving out of traditional finance. They can't keep people at Goldman Sachs or because nobody wants to work on old school finance anymore.
Yeah, that's amazing. I'm also super excited, and like not so from a technical perspective, but I really do believe that DeFi, like decentralized applications, is the future of the internet, and it will scale even bigger this year and the next few years. And I already believe that we are in the mass adoption right now, despite people are saying how to achieve mass adoption. Know that everyone already knows about cryptocurrencies and starting to discover DeFi. So I think in future, we all have smartphones, and every smartphone will have a wallet. So that will be a touch point to DeFi. I also think that the entry will be much more smooth for consumers, so they might not even notice they're like utilizing this DeFi applications like through their phone. So that's where we're heading right now, and I'm really excited for some other things that are still yet to build on this decentralized technology, like social networks, maybe where we own our own data and we give permission to use our data to advertisers. And that because it's a big problem of the 21st century. So it's still super early, the very beginning. A lot of the things are not yet discovered, or at least like fulfilled their potential, even like hedging, and we're still missing a lot of like traditional instruments in DeFi to like increase this institutions adoptions as well. So very exciting and super happy to be in this sphere. Yeah, we'll be building.
Just on a side note, guys, if you're watching this, Anatoly mentioned Star Atlas. This is a gaming blockchain platform. Just check out the graphics. They're not live yet. They promise to go live in July, but it's an amazing graphic because it blew my mind. So check it out. I'm not advertising. It's really awesome. Yeah, the graphics
Awesome.
are insane. Yeah.
Guys, yeah, we are just to have 1 minute to finalize this discussion. Catherine, I know that you are so excited of upcoming blockchains as a woman. I don't see so many developers yet inside as you are become the first one. Yes, it's great. And Anatoly, you are doing the same, the huge project that even women tries to get into and understand how that code is really works. Rust is on our hearts. Catherine.
Yeah, that's pretty much it. Thank you guys for participating and sharing your thoughts. And I am excited to watch what's coming for both Solana and 1inch. Thank you so much.
Thanks a lot,
Right.
Valeria. Thank you. Anatoly. My pleasure. See you a little bit later somewhere on Earth, but now we are going forward and we'll be back within a minute. Bye.
Sure.
All right, thank you.
Catherine,
Bye.
Sergey, Anatoly. Bye-bye.
Thank you.
Hi, and welcome back. So without further ado, I'm going to introduce our next speaker, Andrew Schmitz from Aave. And he actually showed me how to pronounce it correctly, Aave. Hi, Andrew, welcome. Thank you so much for being here with us. Yeah,
thanks for having me.
Aave. Is it Aave or Aave? Okay, never mind. Andrew, what are you going to talk to us about?
Yeah, so today I'm just going to be giving a brief overview about what DeFi is, and then really digging into what the Aave protocol is and all of the different ways that you can interact with as a user and also as a builder. So without further ado, we'll get right into it.
Sounds exciting. Yeah, go on.
So to start off with, just laying the groundwork. So kind of the technology that Aave is built on top of is blockchain technology. And essentially what this is it's just a public database where everybody agrees on the same state. So you can think of that like a single source of truth. Every single person in the network agrees that what this database is returning is the true value of events. And so kind of what we build with this blockchain technology are called smart contracts. And so these contracts can be used to do a lot of different things. Kind of the most basic use case is defining assets. So you can think of this just like storing the balance that everybody has for a certain token. Agreements can be like, I agree to pay you a set amount of tokens every like 30 minutes, or applications. And applications is kind of the open-ended one, but also kind of the most exciting subset of smart contracts. And we'll dig into why that is in a minute. So every contract on a blockchain has an address. So if you think about it like a contract that has some application, the address won't just represent the balance of that user, but it also represents how to interact with the contract, how to query different fields, how to call functions, and it's accessible to absolutely anybody else on the network. And once these contracts are deployed, they have this property called immutability. And what this gives you is this kind of, we call like a digital vending machine, where essentially if you put some input into a smart contract, you're always guaranteed to get the same output out of it. And kind of what's built on top of these smart contracts, the application side of things, is what's called DeFi. So it stands for decentralized finance, and it's essentially an ecosystem of these applications, these digital vending machines, where users can facilitate and perform financial services. And these services can be anything, things like swapping, lending, derivatives, payments, insurance, and new ones that are coming out every single day. And this is just kind of the DeFi that exists as of a few months ago on just the Ethereum network. Ethereum is just one smart contract platform. There's many that exist out there and are coming out all the time. But as you can see, like there are so many different applications in this space already. And it's continuing to just grow rapidly every single day. And Aave is an example of just one of the protocols that exists in this ecosystem. So what exactly do we do? Well, we're a decentralized, non-custodial liquidity protocol. So it's essentially, you can think of it like kind of a digital bank where people can come in and they can deposit assets and earn interest. And if you have collateral in the system, you're able to then borrow from that pool of assets and take on what's called an over-collateralized loan. So how this kind of works, if you think about two users in the system interacting with Aave, so we have this first person and they're going to lend ETH into the system. And then this second person is going to come in and borrow this ETH. And so the person that borrows it will pay an interest rate. And then that interest gets paid to the person that lends it. And what's cool about this system is that these two people that are interacting with Aave, they don't have to know each other. They don't have to take on the risk of like each other's positions. It's completely handled trustlessly, and kind of like all the counterparty risk is managed by like the smart contracts themselves. And so what happens whenever you deposit your Ethereum or any other Ethereum token onto Aave is you get what's called an A token representation. And this is basically just a one-to-one tokenization of your deposit. So if you were to deposit 100 USDC into Aave, you would get back 100 AUSDC. And this AUSDC actually accrues interest based off of the parameters of the protocol and also the demand for borrowing that asset. So like if there's a lot of people that want to borrow USDC for some purpose, then the people that are depositing USDC would be earning a higher interest rate. And this interest increases the balance of your tokens every single second. So your balance goes from 1 to 1.001, 1.002, and it just keeps going up like that every single block. And so in addition to being able to earn interest on your deposits in Aave, the other thing that you can do is borrowing. And so you can use your the assets that you deposited as collateral in order to take out a loan against them. And in Aave, you can do this at either a stable or variable rate. So that's how you're borrowing the tokens. And so why would you actually want to take out an over collateralized loan? Because if you think about it, if I want to borrow $100 to do something, it may seem kind of counterintuitive that I would have to deposit more than that in order to borrow that $100. But there's actually a variety of use cases for taking out over collateralized loans. The first is adding leverage to your deposits. So if, say, you deposited 1 Ethereum, on Aave, you could then borrow like 50% of that and then buy more Ethereum. So you would essentially be 150% exposed to that asset price. And then kind of the more general use case is gaining access to capital without selling your assets. And this is actually extremely, extremely important. And I think it's kind of best illustrated with an example. And so if I'm a person and I own 1 Ethereum at a price of $1,000, and I decide to sell half of that Ethereum for $500 because I need that money to do something, pay rents, absolutely anything really. I can then, so I sell my 0.5 ETH for $500. The second option is that if I deposit this ETH into Aave, I could then borrow $500 from that. So now in both cases, I have $500, but then say we go sometime into the future and Ethereum is now trading at $2,000. In this first case where we sold, our new balance is now $1,000. And with our Aave collateral, our collateral is now worth $2,000. But since we took out that $500 loan, we're left with $1,500. So by not selling our assets, by keeping our collateral locked and just borrowing against them, we actually made $500 in this scenario. And you can think this is an example of essentially borrowing to hedge like your upside risk. So you want to maximize your exposure, but you could think you could do this in the opposite direction. If you thought that the price of Ethereum was going to go down, you could then borrow Ethereum and then pay it back cheaper at a later date. And so it's really versatile. Like you don't just have to use this capital for longing assets. You can use it to short assets. You can use it for insurance, external purposes, absolutely anything. Oh, and also, if go back to this example, if you were to have sold your ETH instead of borrowing against your ETH in order to get access to this $500, this sell would be a taxable event. So you're not only losing the $500 here, but you also have to pay capital gains tax on that 0.5 ETH that you sold. And so now we're going to get into deposit, control, earn, innovate, because this is kind of like the slogan for Aave. And I think it kind of gets across a lot of the important points. So putting your assets to work. Like I said, when you deposit assets into Aave, you can earn interest and get access to a line of credit. So what can you deposit? Well, there's lots of different assets and more being added constantly. These are just the 3 markets that we have available today. The first 2 are on the Ethereum network, and then the third is on the Polygon network. So earn, like I said, you can earn money from facilitating borrowing, so putting your assets up for other people to borrow, but there's also a few other ways. So we introduced what's called yield farming a few months ago. This is essentially you get paid in addition to the interest of lending your assets, you'll also earn tokens for doing so. So like on the V2 market, you can earn Aave rewards for doing so, and on the Polygon market, you can earn Matic rewards. And then the third thing is what's called staking. So we actually have this Aave token, which kind of backstops the risk of the protocol. And you can actually deposit your tokens into our safety module, and you will earn some Aave rewards for doing that as well. And this is just one example of what the deposit rates looked like on May 12th. So as you can see, you're earning some pretty competitive interest rates. And these are all US dollar-backed coins. So, this isn't your traditional 0.5 APR savings account. So the next kind of point for Aave is controlling your funds. So Aave is completely non-custodial. The idea is that you're not trusting like the company of Aave to hold your funds. You're trusting the protocol of Aave. The smart contracts will actually manage your deposits. Like we, the people at Aave, do not have any access to your funds, and you're able to redeem these funds for your underlying collateral at any time. So how do we make sure that there's always enough liquidity in the system that people can withdraw their A tokens at any point? This is kind of controlled by a system called liquidations. So if a person has a position that is too risky, essentially they're borrowing more than that they are allowed to borrow, another person is able to come in and pay back part of that person's debt and take a piece of their collateral at a premium. In this case, it was like 5%. And so it's kind of a no-brainer for this person on the right to perform this transaction, because if there's ever a person in the system that falls below their health factor, they borrowed too much, there's always an incentive for somebody to come in and pay back this debt and receive their collateral, because essentially this is free money for the person that is performing this liquidation. But we also have a second backstop, which is the Aave token. So this serves the purpose of not only governing how our system works via proposals, but also ensuring the safety, because this is our #1 priority. And so how it works is that the Aave that is staked into what we call our safety module serves as a collateral of last resort. So if we get into a situation where there's not enough liquidity in the protocol for people to withdraw their A tokens, essentially there's bad debt in the system, the Aave would be auctioned off and used as a form of collateral to pay back. And currently we have over $2 billion in our Aave safety module. I think making it the single biggest like isolated insurance pool in all of DeFi. And so I already mentioned kind of that the Aave token also controls the protocol. And so kind of what these token holders have control over is the insurance pool. They have control over how the money markets operate. So what markets are available, the assets inside those markets, the parameters for how much you're able to borrow, what can be used as collateral. There's a lot of different kind of inner workings of the protocol that are controlled by the token holders. And then the third thing is what's called an ecosystem reserve. So this is essentially just a giant pool of funds that is controlled by the Aave token holders. They can decide how it's spent on community initiatives. And I'll actually cover a few things that were funded by this reserve in a little bit, actually on this slide. So this leads us into innovate, and kind of the first, like most direct way that you can help innovate at Aave is through proposals. So people that basically come in and they see things about the protocol that they want to change, and they're able to post essentially just requests for comment on our governance thread. And if they get enough traction, they will get put up for a vote. And these are two recent proposals that were put up by just community members at Aave that passed and are now part of the system. And so the first is liquidity incentives. So this is the yield farming that I kind of mentioned earlier. So before there was no system for this, like essentially it was when you deposited tokens into Aave, you earn the interest from those deposits, and that's it. But this proposal, proposed by an external community member, introduced Aave rewards for people that were actually depositing to the system. So a little piece of that ecosystem reserve is now distributed to every single person that participates as a lender or a borrower in the system. And then the second proposal is the Aave Grants DAO. So this is an external DAO. They're completely separate from Aave, and they essentially just control a portion of that ecosystem fund. And they're able to fund basically any kind of project, technical, non-technical. I actually cover in a little bit the kind of the things that you can build on top of Aave. But this is extremely useful because, we're an open source community project. And so we want to encourage, anybody to come in and help build stuff on top of us. And the next step of innovation is kind of like some more innovative things that you can do. Two things kind of specific to Aave that you can work with are flash loans and credit delegation. So flash loans is essentially a way to get an under-collateralized loan, which means you don't have to put up any money in advance in order to borrow. And this lets you borrow essentially any unused funds in the Aave reserves. And kind of the catch is that you have to repay this loan within a single transaction. And so you can do absolutely anything in between the time that you take out the loan and you repay. It's just that those actions have to fit within one single Ethereum block. And if you're not able to repay the entirety of the loan, the blockchain will just revert to its previous state, and it's like it never happened. And there's all kinds of cool things that you can do with flash loans, like rebalancing positions, like entering like leverage positions, arbitrage, and liquidations are kind of like, I'd say, like the biggest use cases for flash loans. And the next is credit delegation. So this is if you have borrowing power in Aave. Say I have the ability to borrow $100 from the system, but I don't want to actually use this borrowing power because I don't want to take on that risk. I can approve this borrowing to somebody else. So I can say, hey, if you want to borrow this $100, you are now able to do that on my behalf. And by letting them draw that credit, you could have some kind of off-chain agreement where this person would be paying you interest on that loan. So you can think about this, if I were someone coming into Aave, I could deposit my assets, earn interest by letting other people borrow them, but I also now have access to a credit line that I can delegate to other people and then get paid by delegating that credit that I own as well. So kind of a way to earn additional yield. And this is kind of a very underexplored feature of Aave that we're kind of working on now to kind of expand like what people are able to do with this credit delegation. And I kind of already mentioned, but anyone can create any new building block or expand the existing building blocks of Aave because DeFi is really kind of an open sandbox for finance. Every piece of code, every function is open to anybody. Anybody can read these contracts, they can fork the code and build really exciting things on top of it. So like I said, A tokens, lending, borrowing, credit delegation, flash loans, governance, all of these systems are open source interfaces. You can plug in your piece of code to them and add whatever functionality that you want. And the possibilities are really endless for what you can build. And I'll briefly mention Polygon. So this is the other network that our protocol is deployed to. On Polygon, we have extremely low transaction fees, which means that you can do much more complex things that you essentially could do on Ethereum, but they would be extremely expensive to perform. And so we're looking forward to really seeing how people are going to push the boundaries of DeFi on these like lower transaction fee networks, because now we can have even newer tools, more complicated things that we couldn't exist before. And really kind of the end goal with all of this is enhancing the DeFi user experience, making it easiest as possible for a new person to come in and participate in these systems. And lastly, if you want to innovate with Aave and build something on top of us, with the approval of the grants now, it's easier than ever to get funding. And so you can just go to aavegrants.org or check them out on Twitter to learn more about all the different ways that we're looking for people to get involved. And here's some last minute resources. And with that, thank you guys for your time.
Thank you, Andrew. It's really interesting to get in touch with Aave. Also, Catherine, we have a couple of minutes left. Just maybe you have a question to Andrew.
Yeah, how are you planning to attract new users to try your platform? Because you've showed how easy it is, right, to use it and to create a token, but how are you planning to attract new users?
Yeah, I would say kind of like the two biggest things in order for, DeFi in general, but Aave specifically to really grow our user base is addressing user experience concerns. And I would say that falls into kind of two places. One is like teaching people technically, like getting them up to speed with all the tools and knowledge that they need, just to understand like the risks that are associated with these things. And also just like, basically just the education side of things, educating people about what these things are, why they're useful. And then the second part is risks. So this is regulatory risk. This is smart contract risk. Essentially we need to get to a point where, people can have these guarantees that, they're operating within the boundaries of their country and also that they're taking the proper precautions when they're interacting with these things. because, money is not something that people want to mess around with. They want to make sure that if they're depositing to something, that it is a legitimate product, and that it's something that is, viable for them in the long term financially. And so, yeah, we want to address both of these concerns, scaling user experience, addressing risk. There's lots of different ways that DeFi can essentially grow our user base.
Is it possible to share the growth rate, right? So you've launched in 2020, am I correct?
Yes. Yep. Current version launched in 2020.
So it's been almost a year, maybe more than a year, right? Or less than a year?
Been a little bit more than a year. I think we were like February or March 2020.
In terms of growth, right? And in terms of the increased interest in DeFi platforms, can you, in percentage, probably tell us what kind of growth you have experienced?
I don't know the exact metrics. I know we have, there's a site called Dune Analytics, which has really nice dashboards for, essentially querying anything you could want to know like that about blockchain platforms. But I'd say in general, so Aave went from 0 to somewhere like over like 20,000 users on the Ethereum network as of like March of this year. But then once we launched on the Polygon network, which has these lower transaction fees, we actually passed the number of users on Polygon then from our Ethereum network in just under like a month from launching it. And so it shows that there's a lot of interest for people wanting to use these things, but sometimes the limitations of Ethereum can kind of get in the way for people. But once we sort of knock down these barriers and solve these scaling solutions, there's a lot of people that are eager and want to use these things. And so, yeah, I mean, we've had kind of a parabolic increase over the last couple of months. I don't know about number of users, but from value locks, I mean, we started at 0 and we're up to, I think, 21 billion roughly now. And, it's just been astronomical growth over the last year and change.
That is amazing. And can you repeat the name of the platform you've said, because I'm writing it down?
Oh, it's called Dune Analytics, DUNE Analytics.
Yeah, I'll read that. And the last question is, why did you choose Polygon? Why not anything else like Polkadot or Solana?
Yeah, I think we chose Polygon mainly because of Ethereum compatibility, because the smart contracts that we wrote for Ethereum can be directly ported to these kind of networks that support like the Ethereum virtual machine. So that's kind of like specifically why we chose Polygon, but also just because it was kind of one of the first scaling solutions out there that had really like started to attract users. And that's what we're after. We're after platforms that are really growing and are able to fit our needs. And kind of at the time, Polygon just looked like the best fit. Now there's even newer platforms coming out, and we're definitely, not limiting ourselves to the networks we're on now. And we're definitely looking into these newer networks that are out there. But just at the time, Polygon just kind of made the most sense because, we already had part of our Aave contracts deployed there anyways because of a project called Aavegachi. It's kind of an NFT project that launched on Matic. And so, yeah, it was kind of a no-brainer for us that Polygon was a good move.
And the best fit for Aave is going to be Binance Smart Chain or Binance Smart Chain. Even the addresses are the same. You just have to choose another network. Why Polygon? I don't know. I really get embarrassed. The Binance Smart Chain is much more better and the right fit because it's the same blockchain. It's just fork of Ethereum.
Yeah, I mean, Polygon is the exact same way in that if you have an address on Ethereum, all you have to do is connect to this new network. And kind of the reason that I can't.
Same as Binance Smart Chain. The same story. Yeah, for example, I'm using MetaMask. I'm just have to change the network name to connect to the Polygon, right?
Yep.
Or it works as shard. It works as a bridge.
So it's a little bit of both. So they're essentially it is a completely new network. It's controlled by the Polygon token holders. There's a little bit more decentralization for Polygon than Binance Smart Chain in that it's not a true side chain. It's what's called a commit chain. I won't dive too deep into the technical details, but essentially like the security of the Polygon chain has some form of like checkpointing with the Ethereum blockchain, whereas like Binance Smart Chain is completely controlled by like just the Binance validators. And so I think kind of that decentralization concern is a little bit of what's kind of led us to Polygon and not Binance Smart Chain. But yeah, the user experience, I would say, is very, very compatible between the two of them.
Got your point. Thank you for your time. Thank our viewers for your attention too. We'll be back very soon. Stay tuned. Don't go away.
Thank you, Andrew.
Thanks, guys.
Ladies and gentlemen, we are back, and our next distinguished guest is Peter Jensen. He is he is CEO of Rocketfuel Blockchain Incorporation, and the topic is going to be about NFTs, DeFi, and next generation payment solution. Peter, you are so welcome. This stage is yours.
Thank you very much, Sergey, and the entire team. I am speaking to you here from actually I'm in Los Angeles today. Wow. But normally I'm in San Francisco, and I look forward to sharing some of our data points and viewpoints on NFTs and blockchain in general, and how it can change our industry, and how the millennials and young people are driving all of this. So I'd like to first just start with some basic data points, and then we can go into some of the details. For a while, we've been saying that we believe 2021 will be the year of the blockchain technology. And the reason is, it seems like everything is coming together. You have the industry with initiatives, you have the governments with initiatives, and you have the consumers, or just people like all of us. If you look at the governments, there are a lot of initiatives. In the beginning, they were a little hesitant, but you saw last week with El Salvador making Bitcoin as a legal tender. You saw a couple of weeks ago with Sweden and Dubai that are announcing their plans to release their digital currency. So the governments are behind it, and that adds a lot of credibility. You have the industry with Facebook, with PayPal, many others that are really going behind Bitcoin. And then you have the end users. So the number of wallets are just increasing rapidly. And what it means is that people are getting just more and more experience with cryptocurrency, mostly right now as a store of value, as an investment vehicle. But I think as we are starting to see more and more applications use cryptocurrencies, they'll see that it can be used so for much more than just store of value, but also as a technology to make our daily lives much more efficient. We'll talk about one of those areas a little later when it comes to payments. So who's driving this? Yeah, as it's not a big surprise. It's the young people, millennials, Gen Zs. Some of these studies show that they're really the ones that are really driving the adoption and collecting Bitcoins, including NFTs. And again, I don't think it comes as a surprise. Every time there's a new technology, it's usually the younger generation that is driving the adoption. So a couple of other data points here. For the past many years, if you look at what young people invested in, they would invest predominantly in technology stocks. And that has moved towards the cryptocurrencies. We see that just like they were, their preferred investment sector was technology, now it's shifting, and they would much rather own a Bitcoin than a bond, government bond, or real estate or gold. They're just more excited about that. It makes total sense. So when we talk about distributed finance, the base is increasing, and an example of DeFi is when you take your cryptocurrencies and you deposit them and you lock them in for a while, let's say 6 months, in return for an interest rate. So just like you can put your money in the bank and get an interest rate, well, depending on where you live, you may or may not get interest right now because interest is so low. But if you deposit your cryptocurrencies, you can get an interest rate on your cryptos, and it shows that people have confidence in cryptocurrencies. If they're willing to lock it up for a period of time, it just means we're confident that this is here, it's going to stay, and it's going to increase in value. Otherwise, why would you do it? And this last chart that I just wanted to share with everyone is talking about the total value of these direct deposits, which I just spoke about. So all the data is really pointing to a massive increase in the speed of which we adopt cryptocurrencies and blockchain. And this is great because we see this, I'll talk about this a little later, we see this once in a while when there's a new technology coming out. It's being adopted by certain segments early on, and then it's becoming mainstream later on. So let's talk a little bit about payments and how we can use these technologies to make that sector a little bit more efficient. So let me see here. Yeah, so this is what I just talked about before. This is why I'm excited about this new technology, because, and this is an important point that I want to make. A lot of times when people talk about crypto, they talk about it as two things. They say crypto equals Bitcoin. Well, that's not always true, right? There are many, many different currencies, and Bitcoin happens to be one of them, very well known, just like there are some fiat currencies that are very, very well known. But they think about it as a store of value, as an investment vehicle. And that's a great thing. But what I'm excited about is blockchain and cryptocurrencies as a technology that enables, as I said, new business models and new business processes and make things more efficient and easier for all of us to use. And if you look back, once in a while, you have a new technology that is matched with inefficient verticals, and then inefficient verticals that have a lot of problems because they have been doing the same thing for a long time, and it's just not efficient. In the early days, in the late 90s, we saw the internet, a great new technology, right? And it was used by many, many different companies to make a lot of things easier for us. Amazon made it easy for us to buy goods and many other things from home. You have the social media companies, you have the dating companies. All of these applications were made possible because of the internet technology. Then you had mobile, right? And the mobile technology allowed many things. I think the best example I can think about is the transportation industry with taxis, where they just went in and made it much more efficient. Lyft and Uber made it much more efficient to get a taxi. We all remember the old days when we had to sit there and wait for a taxi and it was raining and we had to call them back and so on. Not anymore. So again, technology that was used in a very inefficient industry. The old taxi industry you had to call up. It was just not the best way. Electric vehicles is another area. And now we have blockchain. Again, here's a new technology. And within our space, the payment space, we have an old industry that is based on an old architecture, 40 years old. Credit cards are 40 years old, and it's a physical architecture, and it's not so efficient. So that's why I'm excited about it. That once again, we have a technology, and it has huge potential. But just like with the internet, I mean, here we are 25 years later, we're still not completely rolled out everywhere. There's still a lot more potential. So it will take time. It's still very early on. So let's just talk about the e-commerce market here. The e-commerce market is very big, 3.5 trillion, yet only 14% of all commerce is electronic. The rest is still brick and mortar. So there's still a lot more to go. But the current solutions are just not good enough, as I talked about. If you look at it from the merchants, those people who are selling goods on the internet, they're really not happy. I was just meeting with a customer here in Los Angeles yesterday, and I was asking them, so how much do you pay to process credit cards online? And they said in this situation it was about 4%. And I said, well, so that's a lot of money, but are you happy about it? No, I'm not happy about it, because I have a lot of chargebacks. I have a lot of fraud. I have a lot of declines, and I have cash flow issues. So sometimes when I post something, a payment, I don't always get the money until later, and so on. So for example, he was telling me I have 5 people in customer support that I need to have there to handle all the chargebacks when people tell me that they don't want to pay a certain fee that they were charged. So they paying 4% plus all these other problems and all these other costs. So it's a very inexpensive, very expensive solution. And the reason is, as I said, it's very old technology, and it's just not efficient. A couple of other data points that we can point to. If you look at e-commerce today, 19% of all cart abandonments is caused on mistrust. So people do not trust the system. Consumers don't trust the system. So let me give you an example. I go on a website. If I go on Amazon.com, I trust them. I've done business with them. But then I see an ad on Facebook for a pair of shoes. And I go to that website and I click through it. And when I'm just about to put in yet again all my credit card information, yet again I have to create an account. By the way, how stupid is that? I buy stuff on 30 different websites. I have to create an account every single place. I have to put my credit card every single place. I have to put my CVC code every single place. No wonder it's fraudulent out there, because it's so easy. If just one of those 30 websites is getting hacked, my information is compromised. But anyway, and that's why people get worried. And so they go through all the steps, and then they're just about to buy, and they said, nah, I don't want to buy, because I don't know if this website is real or what's going on there. And so the merchant that invested a lot of money in the Facebook ads and finally got someone to almost buy these shoes, they're losing out. And there are many other issues with the current system. So if you think about it from the consumer point of view also, it's not ideal either. And a lot of people will tell me, well, Peter, I buy stuff online. It's not that bad. I can figure it out. Yes. Just like I could get a taxi before. I mean, eventually it would show up and, I would be late and all of that, but it eventually works. But today, where at least those countries that have Uber and Lyft, once you're used to that, you will never go back to the old way of driving taxis. And it's just, and the same thing is going to happen with the payment industry. The consumers are concerned about the security of the data a lot. And rightfully so, by the way. You see all these articles. And it's not always an easy checkout experience. Now, we've gotten used to it, just like we got used to the old taxis. But if you think about it, a lot of times you have, what are they called? You basically jump from one page, redirects. You jump from one page to the other. And I can maybe figure it out, but my mother is getting confused when it opens up all these different windows. So it doesn't have to be that way, and it shouldn't. So for the merchants, it's not efficient, and for the consumers, it's not efficient. And again, it's because it's based on a very old technology. And so just here at the end, I wanted to just address one way we're just one out of many who is using blockchain technology to fix that. So I'm just going to mention that Rocket Fuel, we are a company here in the US. We provide a payment solution that allows the merchants to pay with either cryptocurrency or bank transfer. And the benefit of that is really that we're basing everything on the blockchain technology, and we inherit all the benefits from the blockchain technology in terms of security and all of that. And we're seeing a lot of adoption, especially with young people. If you think about it, when I go to a university here in the US, and I ask people how many own cryptocurrencies, there's a lot of people who own cryptocurrencies. And they're all saying, I just want to spend it. I want to be able to buy it. Why do I have to have a credit card and pay fees with my bank if I want to do all this? I have all this money just right here on my phone. Why don't I just spend it here? And so that's what's driving this change. So the solution that we've created, and I think this is going to be the future of shopping, because really the choice is we stay with an old-fashioned physical architecture. The physical architecture is the physical credit card that was so inefficient that they had to put a chip on it because it wasn't secure enough. And when that was not good enough, they had to put a CVC code on. These are just examples of all these fixes that they're trying to make because it's not efficient. And we believe that the future of payments should be digital and will be digital because so many other things have gone digital. And so the solution that we've created is simply that you can go in on a website, and if you want to make a purchase, you just click on the sweater, and just like on Amazon or another website, you can say, yes, I would like to either pay with my Bitcoin or my Litecoin or from my bank account directly, because I don't need to use my credit card for that. And then the payment is done. Super easy. I'm not going to go into a lot of details here. Yeah, it's built for millennials, right? It's a single-click payment solution. And if anybody wants to try it out, they're welcome to go to our website, which is rocketfuelblockchain.com. If I know that many of you own cryptocurrencies, if you've never tried to purchase something with your Bitcoins, for example, you can go to our website and you can buy a gift card for Amazon or Starbucks. And it's just to try it out. It's not a lot of money, but then you can try to make a purchase with your cryptocurrencies and see how that works. Super easy. And then think about it. Once this is rolled out all over the world on every single website, life is going to be a lot easier for a lot of people. So, for example, in 5 years, I do not believe that there's going to be any website or any store that does not accept crypto. You'll still be able to pay with credit cards. You'll still be able to pay with cash, probably, but it will go in that direction. And just like you saw early on with my data point about here 25 years later, we still have a lot of brick and mortar trade and not everything is e-commerce, then it's also going to take time. In 10 years, maybe it's going to be 50-50, 50% credit cards and 50% crypto. But it's going in that direction. And think about it, once you can get your salary paid, because that is not going to be far from today, with these governments who are issuing their own coins. If you live in a country that has been issued a coin locally, now you'll be able to either get your salary every month from your employer deposited into your bank account or into your phone in your wallet. A lot of people are saying, yeah, just put my salary into my phone and my wallet. And then if they can pay everywhere and they can get credit and so on, why would they need a bank account? Why would they need a credit card? And so I think what happened to the taxi industry, where the taxi companies were basically replaced by technology, I think the banks, a lot of people are just going to say, I don't need a bank account anymore. And by the way, that's why I think a lot of banks are are pushing back on this because they can see where this is going. So in summary, the payment industry is large, it's old-fashioned, it's problematic, and the blockchain technology has the potential to make all of this much more efficient. So with that, I thank you for your time, and I look forward to a panel later on today, and I turn it back to the organizers.
Thank you, Peter. I'm really proud of this type of companies it's not the disruption, it's trying to cutting edge the technology and bring us into the new kind of future, because all of us really get tired of using that fiat world, we're using that cars, but we do not see so many solutions. And I want to suggest you as companies something. Please do some add-on on, for example, on Google browser. And when I'm coming to some e-shop, some market, and I can click on that add-on and say, Sergey, you can now pay by your crypto, by your Bitcoin, by Ethereum or something else. Yes, you're able to on-site to do that payment via local currency, but now I'm able to add something else and use my own crypto. It will be the new world, and I'm ready to promote that within my community. Many thanks to you. Peter is really happy to see you. Guys, stay tuned with us. We'll be back very soon.
DeFi for You is out to change the financial landscape. In doing so, we're going to help small and medium-sized businesses gain access to capital that banks have refused them. Pawn is one of the oldest and most profitable financial service known to us. DeFi for You is bringing this industry out of the shadows and into the light. Thousands of SMBs have stock they can't finance. They've been hung out to dry by the banks. DeFi for You will let them use that as collateral for a loan. Our team includes the founder of Traveler and the creator of DearKey, as well as bank advisors and financial coaches. We know regulation is coming, and we're going to be ready for it. The banks have failed us. The titanic e-commerce giants have too much power. We're here to disrupt. We're here to smite the titans. Visit DeFi for You now to be a part of the next chapter of decentralized finance. Don't be left behind.
we're back. And now with us, Daniil Gorbatenko. He is the head of community and content at Fuse Network. And his topic going to be about how DeFi protocols can be used by mainstream people. Daniil, the stage is yours. Go ahead, please.
So hi everyone, nice to be with you today. And yeah, as Sergey just said, I'm going to talk about DeFi and how, even though there's a lot of perception about DeFi as an industry which is super sophisticated and accessible only to highly technical people, which is also probably promoted by the coverage about like flash loans and sophisticated derivatives and whatnot, which is fair in a sense because a lot of DeFi is this. But what I would like to argue during this presentation is basically that surprisingly, mainstream audiences, ordinary people can actually here and now already benefit from DeFi protocols. And in particular, there are three things, three elements of DeFi which is the easiest probably to use at the moment. So one of them is basically crypto payments. So basically people sending crypto assets to other people or paying increasingly for ordinary transactions. Then another element is decentralized exchanges. And finally, also liquidity mining, or also known infrequently called yield farming. So let's handle them one by one. So first of all, payments. So until quite recently, using crypto for payments was kind of a bit difficult. First of all, like the popular and widely used blockchains like Ethereum 1.0 and Bitcoin have been and still are like quite slow and inexpensive to use. Bitcoin has a 10-15 minute block interval, and sometimes you have really very high fees for sending even basic transactions, and also you need to handle like all the fee estimation stuff, whether you propose the right amount of fees, etc. So you can sometimes not even be sure whether the transaction you are trying to send is actually going to pass. So a lot of kind of cumbersome and expensive work to make payments, to which obviously mainstream audiences are not accustomed. And yeah, but this has been changing recently. So first of all, we have quite a few layer 1 and layer 2 protocols which are scalable, fast, and low cost to use. So let's say those that are the most popular are Binance Smart Chain, Polygon, especially Polygon POS chain, for example, Celo, and also what we are doing, our blockchain platform in Fuse too. So this has now been kind of more or less addressed. If you try to send a transaction on one of those chains, you don't need to bother all that much about transaction fees and whether your transaction is going to take 10 seconds or 10 hours. So another advance making crypto payments much more user-friendly and accessible to mainstream users is what we can observe is the industry-wide push towards user-friendly mobile crypto wallets. So for example, MetaMask Mobile or Celo's Valora or Elrond's Maiar, or the wallet we recently launched, which is called Fuse Cash. So the idea there is that basically using a whole bunch of techniques, we're seeing more and more that wallets are becoming as easy to use as traditional mobile payment apps. soon, really, I hope that users will not see any major UX difference between, let's say, saying a traditional mobile payment app like Venmo, for example, and a mobile crypto wallet. So this is it about payments. Then the second major element I mentioned are decentralized exchanges or DEXs. So even now, trading on centralized exchanges of DEXs is fragmented in the sense that not all crypto assets are on all the exchanges, meaning sometimes to get from one asset to the other, you need to make one transaction on one exchange, then jump to another one, and this is not as simple as just connecting to an app and making a transaction, because the exchanges, centralized exchanges, increasingly demand a lot of KYC and a lot of fees from users. So this adds a lot of friction to crypto transactions, and so one of the big responses that came from the crypto space to this was the appearance and development of decentralized exchanges, especially those based on the principle of automated market maker, being pioneered by Uniswap. And now there is obviously a wide array of them, including, let's say, Uniswap on Ethereum, PancakeSwap on Binance Smart Chain, QuickSwap on Polygon, and so on. So now, there's basically one for every taste, one can say. There are some which are like Uniswap V2, quite simple. Others a bit more sophisticated, like, let's say, Uniswap V3 and so on. And also what is also interesting is that increasingly decentralized exchanges get integrated with mobile crypto wallets. So let's say MetaMask Mobile allows you to directly use Uniswap from your smartphone. Same with, let's say, the 1inch mobile wallet or our mobile wallet that I mentioned. And this is obviously very cool that users can start trading right from their mobile interface without passing to their laptop, for example. And yeah, so DEXs are easy to use because of that, and because, yeah, basically, what do you need to use a DEX? You need just to have a public address with some tokens on it, and a supported wallet like MetaMask or some other, let's say, wallet that supports Wallet Connect or whatever. So yeah, DEXs are, I think, also a huge move forward for the mass adoption of DeFi and towards making DeFi really something usable by mainstream audiences. Now, the third element, which may sound a bit more surprising, is liquidity mining or yield farming. And there are obviously a lot of types of it, and some of those are really sophisticated, but what it refers to is basically DeFi protocols rewarding their participants, and the types of participation can be different. It could be like providing liquidity or trading or other forms, but the idea is basically that the protocol rewards users for their engagement with the protocol token. And yeah, as I said, some of yield farming of course is developing rapidly, and one could have a feeling that every week there is some new technique that emerges and some new protocol that launches that like offers groundbreaking functionalities and so on. But actually, there are some types of yield farming that are quite simple and easy to use, even for someone who is not like a DeFi expert. And I think the simplest one is getting rewarded for the provision of liquidity on AMM DEXs. So consider what you need to do to participate in this kind of yield farming. You need basically to just put the equal amounts of 2 tokens in the pool into, so you need to deposit those tokens. And then when you've done this, you receive the LP tokens for this pool that represent your ownership share for this pool, basically. And then you need to go and deposit those into the liquidity reward smart contract, and that's it. So basically, not something like super sophisticated. No need to necessarily, like, obviously there are some other things you need to think about, like impermanent loss and stuff, but of course everything is in crypto is risky, and you need to look at like how prices are behaving and so on. But it's still, I would say, more or less accessible to anyone with like basic knowledge of how to use crypto and some crypto tools. So yeah. But of course, all that said, yeah. So DeFi, one can ask, why is DeFi still not like facing really mass adoption? And I think part of it is we as an industry should do a better job of maybe not just all the time launching new sophisticated products and protocols and stuff, but also like educate people, educate the crypto community, and also like people who are new to crypto about how they can use like run-of-the-mill like DeFi protocols and tools to already benefit like right away, you know, like not use flash loans, let's say, but use like, you know, if you want to, let's say if you think that an asset is going to increase in price, you can supply this asset to a lending protocol and borrow a stable coin, and let's say repay with by the same asset that you think is going to rise in price, then sell it and repay the loan. So it's not that super sophisticated, even though it's obviously easier to explain on paper. So we need to, as an industry, to do a better job at teaching ordinary users how to, that sometimes it's not that much more difficult to invest and earn using or borrow money and invest them profitably than by using like the traditional banking or whatnot. So what are the barriers that DeFi still has to achieving mass adoption? I think obviously DeFi has a lot of room to grow. So now the estimate is that there are only 2.3 million of DeFi users, which is not even 1,000th of the world's population. So there is a lot of space to grow into, but also what is preventing more growth? So as I said, part of it is just education, I think. But secondly, like a major thing that is still missing is loans that are not over collateralized. So it's not completely missing. There are, for example, Aave already enables lending of its A tokens without like providing, without opening, let's say, without borrowers needing to open a collateralized debt position, for example. And there are other protocols working in that direction, but still we are very far from, let's say, I live in France, and I know that, for example, in France, if you're a restaurant, it's very difficult for you to get a loan from a bank, So my dream would be to see, let's say, a restaurant being able to borrow from a crypto protocol, but a restaurant is not going to deposit 2 times as much collateral to borrow a loan. Yeah, restaurants are usually quite short on money in this regard. So the possibility to borrow funds without like excess collateralization, I think it would change a lot in the DeFi space. And the second thing I think which could be really helpful is like widespread backing of the loans with DeFi loans with real world assets, or tokenized real world assets, of course. Like, for example, like real estate, or like parts of ownership in real estate. And I'm aware of one promising initiative in this regard, like it was Aave and a project called Realt, which I think a bit less than a year ago, they announced a collaboration aimed at sort of crypto mortgages. So I hope that this initiative will succeed, and we'll see a lot more of like asset-backed crypto loans instead of like crypto-backed crypto loans, So that's about it from my part. So to summarize, mainstream users, of course, with some basic knowledge of crypto, can already use DeFi profitably, especially crypto payments, decentralized exchanges, and liquidity mining. But a lot of things will improve if non-over-collateralized lending and asset-backed lending will fully developed in the crypto space. So yeah, thanks for your attention.
Thank you, Daniel. Thank you for interesting. It's not a presentation for interesting information, and so informative for us too. Maybe Catherine, I see that you join us already. Maybe you have something to add or something to ask.
Absolutely. So I know that a lot of people have been saying that we need to educate other people. By other people, I mean people that are not in the crypto community yet. But what exactly does that mean? And how do we as the crypto community should do that? Should we do editorial workshops? I don't know, hackathon for beginners, or videos on YouTube and Twitch? I'm not sure. So how do we do that?
Yeah, of course. I mean,
I have to go stream broadcast as you and me do. Sorry, Daniel, because I have that answer.
So, is the question to me?
Yeah.
Okay. Yeah, I think you're right that it's easier to find the prescription, let's say, to see what's wrong than to find the solution to this. Yeah. I think there is no silver bullet, obviously, but yeah, one thing I think would be just for many crypto projects to focus more on mainstream users. Although I can certainly understand that all the DeFi projects are interested in providing huge liquidity, in attracting huge liquidity from big liquidity providers who would like to use sophisticated schemes. But at the same time, I think even in the communication efforts and even in educational materials, there could be a special focus on just come and use our product our products and other products in the industry, like which are interoperable, let's say, with our product, like straight away, you can do it right now. Yeah.
And then the question
I can admit.
Sorry, go on.
No, go ahead. No, go ahead.
And then the question to you, as a DeFi participant or a DeFi user, how did you start in DeFi or in the crypto community? So maybe that can be an example of entry point to the community.
Okay. So I came to the crypto space in 2016, and I came because I was like, and I still am a sort of a free marketer, and so obviously a lot of free marketers were interested in crypto, and I was observing things happening, and when I found out about Ethereum, it became more interesting to me than Bitcoin, because I suddenly saw how many possible opportunities it offers to like for boosting cooperation, without like with much less friction and so on. So initially I was more like of an observer of the space, and I did some trading, but not too much. But then I started, like, after my PhD, because I was doing a PhD in economics at the same point, I started working in the crypto space because I found it the easiest way forward. And actually, it's funny indeed that I had to learn yield farming and stuff on the job. I was initially I was a bit, when it only appeared, it was much more difficult to use, because on Ethereum, for example, when you do yield farming, the transaction fees are very high, and the block times are, and all this stuff. So now it's so much easier. I think for people right now, it's much easier to enter than it was before.
Yeah, but then I feel like the conclusion here is that you should learn by doing. So yeah, pretty much. So guys, if you want to learn more, try to find a job, and you'll have to educate yourself. But that's of course a joke. There are a lot of platforms and a lot of other sources where you can learn anything and everything about the crypto community, crypto space, and DeFi. Thank you so much for your presentation. Sergey, do you have any questions left?
No, we have to finalize. This cannot also watch us, learn with us, and stay tuned with us. We'll be back very soon for the next panel.
Thank you so much, Daniil.
Thank you.
Sergey, I'm here. You texted me on Telegram.
Ladies and gentlemen, we are back. This is not the final, but this is we're on the final line. And now we are on a panel discussion with us, so many distinguished persons and influencers around the globe. And I would like to introduce them for the beginning. Here with us, Peter Jensen, CEO of Rocket Fuel of Blockchaining Company. I would like to see not Isaac here. Here is Mark Zeller with integration lead. He's from Aave. Saeed Harib Al-Dantaki is CEO of Shisha Finance, and of course, he is CEO of Alphabet Capital, the greatest investment fund in Dubai. Unfortunately, Eloisa Manchesoni not with us today, but I see Mark Zeller. I'm sorry. I want to see the Isaac. Isaac not with us.
Isaac is here. Isaac is here.
I can see him.
Isaac, I'm sorry. Just I don't see your screen. And finally, our panelist, Isaac Rodrin, the head of the business development of Fuse Company. Guys, all of you, so welcome with us, also co-host of this great event, Catherine Ross. Catherine, I would like, as usual, start with you because you have so many questions. Gentlemen.
Yeah, that's my job. Well, first of all, thank you guys so much for taking time to participate in this panel. I'd suggest to go around the virtual table and to tell us a little bit about yourself, your company, and maybe just a little bit of how you ended up in the crypto space. I think we'll start with Isaac. Isaac, is that correct? It's Isaac, right?
Yeah, perfect.
See, Sergey, it's Isaac.
I'm sorry. Yes, I'm Russian. I tell Isaac, I'm sorry.
No. Isaac also works for the different dialects. People prefer Isaac. Sometimes I have like Pepe if that's easier. But yeah, great to be here. Thanks for having us. So yeah, I'm Isaac, head of BD at Fuse. We're an EVM-based blockchain focused on payments, and we really focus on plug-and-play infrastructure. I had a consulting company before I joined Fuse, and I'd say probably one of the reasons, especially during COVID, with the shift and growing of like payments being more open and accessible in different places, and more important when people don't want to touch cash. I think it's just a really important sector to focus on that I'm really excited to be a part of that journey for crypto payments. So yeah, thanks for having me.
Awesome. Saeed, before we're gonna go into your company and your background, I'm curious about the name Shisha Finance. It's a little bit controversial, I think. Why did you decide to name the company like that?
Saeed, your turn. You're muted.
You're muted. Yeah. Could you please? Yeah.
Well, health critics would probably think that is controversial, but the name is, I think we came up with a name that's originating or has roots in the Middle East, but is also globally recognized. I think a lot of people in the Middle East love to lounge at the Shisha Lounge, and then a lot of places all over the world have Shisha lounges as well. So we wanted a name that's rooted in the Middle East, but has a global kind of presence as well. So that's why we went with that name, and it's pretty catchy too.
And what does Shisha Finance do?
So Shisha Finance is a decentralized fund. You participate in the fund by staking on the platform. So your staked amount basically is the equivalent of LP shares in a traditional fund. So we're trying to disrupt the traditional fund system, because normally for a traditional fund, you need to be an accredited investor, you need to do KYC, AML, and you need to have a minimum amount to invest. Whereas with us, you can stake any amount that you want, and you can be anywhere in the world. And you can get access and exposure to a diversified portfolio that focuses on DeFi and NFT projects.
Mark, thank you so much for joining us.
I want to add something. This is the company I also been engaged in. That's why I see that movement when people around sees, I'm talking about influencers, crypto influencers, DeFi influencers, sitting around looking for the project, smoking shisha and say, I know this project. I understand. What do you mean? How they are working around. It's very good place. It's really lunch of understanding what this project about. That's why I really appreciate that name, Saeed. Sorry for interacting, but really.
How
You're
exactly?
very biased. You're very biased, Sergey.
Okay.
Yeah, like your integrity is under the.
What is happening?
Okay, Mark, thank you so much for joining us. I know that you are with Aave.
Yes, Aave. So
your colleague taught us how to pronounce it correctly. So, what about you? What does Aave do? What does Aave do, and how did you end up in the space?
So Aave is the first and the largest liquidity protocol on decentralized finance. We have, as we're speaking, around $21 billion of assets under management. It's not a company, it's a decentralized protocol. So at the end of the day, it's a bunch of smart contracts on the public Ethereum blockchain. And it's completely in control of the Aave asset token holders. And basically what we do as a liquidity protocol is that anybody in the world, without any kind of paperwork, without any kind of middleman or some kind of commission or whatever that we can find in traditional finance, can provide liquidity. And basically anybody can access that liquidity. They will pay for it. And what they pay for it, most of it and almost all of it goes directly to the providers of liquidity. So it's completely seamless. It's completely transparent. It's completely auditable. And that's basically the core principle of what we call decentralized finance. And that's basically what we launched with Aave in the early days of 2020. Aave is an older project than that. We actually launched in 2017, but it's been a lot of work to reach the stage that we are right now and the success that we have right now. And my personal story about the decentralized finance ecosystem is that I actually joined the blockchain ecosystem quite early, and more especially the Ethereum ecosystem in 2015. As you can hear it with my thick accent, I'm French, and I'm one of the creators of Ethereum France, the non-profit association organizing the conference like EthCC in Paris every year since 2016, and part also and support in France of the Ethereum Foundation. And I work with Consensus. I work with regulated crypto brokers and many projects, but I'm very happy to have joined in 2019 Aave to launch the protocol and to provide new financial tools accessible to everyone, because the core ethos is that if you own $1 million or if you own $100, you will be treated exactly the same and you will have the same opportunities. And I think that's the first time in financial history that this kind of things happen. And I think it's important, and I'm glad to be part of it and to be part of this panel to discuss that.
Awesome. Thank you. Peter, I know that you've just had your keynote, but could you please recap a bit of your story and what does your Rocket Fuel blockchain does?
Yeah, so just to recap, what we do is we allow e-commerce merchants, so those people who accept payments with either Visa or MasterCard typically today, to add an additional payment stream. And so now their customers can also pay with cryptocurrencies or bank transfers. And the way I got into this is really that our chairman and founder of the company, he owns a lot of payment service providers that service hundreds of merchants. And he could see how, on one hand, the current system is inefficient, which I talked about in my presentation with high fees and chargebacks and declines and all of that on one hand. And then he saw the opportunity with the blockchain technology on the other side and saying, wow, this is a technology that can solve a lot of the problems. So we created the company, we went public, and here we are with a product and going to market, helping people pay with crypto online.
Thank you. I'm sorry, my dog seems very excited about this panel, so he tries to express himself. So the name of the panel, DeFi Investments, right? So my first question, and I think it's a very obvious one, DeFi applications and platforms, do they really need investments, and why? I think we will start with Saeed.
Yeah, good question. I think it depends on what the project is and what the project's trying to do, and if the founders of the project need funding to actually develop the protocol. So I think most of the new DeFi projects out there definitely need funding to, and most of the cost that they would absorb is related to developer costs, because most of the DeFi protocols function on smart contracts. So definitely, if they don't have funds, then and they're a new project or a new idea that wants to go to market, then for sure they need to raise capital to get there. And it just makes sense that most of the newer projects out there have raised capital, and just like any other startup, they would need to raise capital. And but I think it's very competitive out there, and I think with the current market situation, most people are kind of waiting to see if the market's going to go back up before investing. But yeah, like any startup, I think for sure every DeFi platform or protocol needs to raise capital.
Well, I agree with your point that with current sentiment on the market, everybody's sort of cooled down a little bit and they're waiting for the market to go up before spending money. But the question is, why go with angel investors, venture capital firms, and funding rounds instead of just doing something like IPO, IDO, stuff like that? Why not? Peter, what do you think?
Well, I mean, there are many different ways to raise money. I totally agree that if you want to start a business, you need money. If you want to be number one, it's a proven business model. Startups, the successful ones, they raise money, they grow fast, and they become the leader. So you need money. There are many ways to do it, and VC money is one way. We went the other way with our company, where we went public very, very quickly, and it works for us because we are, it's a hot market and topic. So, and people understand it, payments, and they believe in blockchain and all of that. So, I mean, it depends on the situation, what you're selling. And I think you should try both options, or all the options that are there to raise the money. I think the most important thing is to raise money, because that is how you're going to get really big and successful.
True. Let's talk a little bit about Coinbase. Obviously, it's not a DeFi platform, but it recently went public. But it was a huge anticipation, like hugely anticipated event. But the fact is that the stock went down right after, right? So is this really a successful story? And what do you think? Will we ever see DeFi platforms going public? Isaac, what do you think? Is that even possible?
Yeah, well, I think we'll continue to see like infrastructure changes and opportunities. I think Wyoming recently allowed DAOs to become LLCs. So we'll continue to see models where what we call DeFi, or decentralized finance, or new methods of governance, right? Which is really what we're talking about maybe here in many cases from the fundraising standpoint, become more mainstream, right? And the concept of like maybe one day one of these DAO LLCs going public and not having a board of directors, but being really governed by a DAO and another type of organization. I think we're a few steps away from that right now, but I think it's definitely a future that we can expect coming, maybe faster than we think. And generally, every company needs funding of some sort. It's almost like asking, does it cost money to eat? You might be connected to a chef or a person who might, or a person who can build the product, right, without paying them. But it still costs someone something. So everything costs something. The question is, do we necessarily bootstrap it? And one of, I'd say, the more powerful things specifically in the blockchain space is the opportunity to bootstrap liquidity on basic products, right? So if you can create some sort of small innovation, it might lead to a drastic change in the way people use their money or hold their money, especially in the DeFi space. And that liquidity or money or funding might not necessarily come from traditional routes.
So yeah.
Well, you've mentioned Wyoming, right? But at the same time, just a couple of days ago, the CFTC commissioner said that decentralized markets and tools like derivatives and futures might be illegal. So they're looking at it right now, and they might ban it. And I know that, we have different states in the US, but at the same time, it might be banned in the entire country. So that might, I think, make the process a little bit more complicated. Mark, back to you. So where do you stand on fundraising in different ways for DeFi companies and applications and protocols?
Well, the first thing I want to say, it's all a spectrum. So you don't have DeFi on one side that is completely decentralized with no one control and only a DAO. And on the other side, something that is truly centralized, like Coinbase, for example, a centralized exchange with a stock that is public. It's a spectrum. Yeah, there's a lot of different actors. There's a lot of different needs and situations. And you have things that are inside the spectrum. Like when we take the example of Aave, for example, the Aave protocol, it's a DAO. So, for example, the Aave team, which I'm part of, the Genesis team, we cannot alter the protocol at all. It's a bunch of smart contracts, and we don't have the admin keys. So if we want to onboard a new asset into Aave, if we want to change the interest rates, if we want to do whatever modification, we have to actually ask the committee, do what we call an Aave improvement proposal. That is a vote that is done on-chain, and people vote with their token to decide if they want it or not. And if they say no, even if we are the Genesis team, there's nothing we can do about that. And it's actually fully decentralized, and we've had on average for the past year, 1 vote per week. And the committee is very active on that. We have like delegates that are some kind of protocol politician that represent the other people in the committee, because you cannot ask everyone to keep up to date with everything everywhere. So there's some kind of politics inside a decentralized environment, and it works. And what is really important is to do things in a balanced way, because if you take as a project too much funding, centralized funding from VC, from investors, all these kind of things, and the supply, so the governance of your project is fully controlled by a few handful of actors, is your project actually decentralized? Is it really DeFi? It will be somewhere in the spectrum, but is it close to the full DeFi or closer to our actors more centralized? And it's all about balance, because obviously you need some money to start up your project and your protocol. Because, for example, there's been 6 different security audits to review the code base and to make sure money is safe inside Aave. But a security audit costs dozens of thousands of dollars and even more than that for complex contracts. Where do you find the money if you don't have it? If you're just a smart man able to write code, where do you find the money? You need some kind of funding. So it's all about balance. You want to raise some money, but you don't want to raise too much because you want your project to be actually decentralized. And why do you want your project to be decentralized? Because if you are actually decentralized, you are resilient. There's not a single point of failure. There's not someone you can pick up and say, hey guy, you have a lot of the proposition power, so right now you have to do this, and you have to input this kind of change in the protocol. And if you do that, it's not DeFi anymore.
That is true. I would agree with that. My personal bias here is just that maybe it contradicts a little bit to the philosophy of the entire space. But we're probably in a different market than we were back in 2008 when Satoshi Nakamoto actually created Bitcoin. So my next question is to all of you: if you have raised fundings and money for your company, which way did you do it and why? Let's start with Peter.
Yes, as I think I mentioned before, we decided to go public, and we did that. Well, actually, it wasn't my decision. It was done before I joined, but it turned out to be the right decision. It comes down to a couple of things. One is access to capital at a good valuation, and being in this space actually provides that. But there's another thing, and that is because we're in the financial sector, people need trust. And so our point is that because we are public in the US, we're under the same regulations as Bank of America under the SEC and FINRA. So we have a lot of regulations, and of course it's annoying for us as a startup, but it ensures our customers, our partners, our shoppers that there is some control over what we're doing. Because let's face it, our industry in the beginning had some bad actors, and so people are not completely sure. So I'd say that's an additional benefit of being public is A, you raise money at good valuation, but B, it instills confidence with your customers and partners.
I would agree with the trust part of it, because it's definitely provides a lot more trust for the company. Can I just ask you one more question? Did you do direct listing, SPAC, or just went public?
We did a reverse merger, which is close to a SPAC, but we did it before SPACs really got hot. But yeah, so we didn't do a SPAC.
Right now. Yeah, for
they
sure.
are. So we did it a little bit before we did a reverse merger. The end result is pretty much the same, except you don't give up a lot of equity to some people with great names,
Yeah.
which, by the way, can be very beneficial sometimes. So I'm not poo-pooing that. I'm just saying we didn't do it.
Yeah, absolutely. It's not investment advice. Said, could you share your experience? If you have raised money for your company, which way did you go and why?
Actually, we did it a completely different way.
Okay.
We didn't do a private sale. We didn't do a public sale. We didn't take any money from any investors. What we did was a liquidity generation event, which was a 2-week period where we created the smart contract where people contributed either Ethereum or BNB. We're actually functional on both chains, Ethereum and Binance Smart Chain. So the total Ethereum that was collected was matched with 15,000 Shisha tokens, and it was put as liquidity on Uniswap. And the same happened on PancakeSwap. And that gave our token its initial value. So we didn't raise any money, and all the money that was contributed in Ethereum and BNB is actually locked up in a smart contract, and it's on a liquidity pool on decentralized exchanges. That ensured that our token had a good amount of liquidity. I think it's around 9 million in liquidity on Uniswap, 5 million in liquidity on PancakeSwap. So most projects that list, they tend to have very low liquidity, but we wanted to ensure we had a lot of liquidity. But the way we did it ensured that our token had an initial value, and from the token supply, there was an allocation that's put towards investing in projects and allocation towards development, operations, marketing, and so on. So that's how we kind of, if you like, indirectly funded the project, which is completely different to what most projects out there have done.
Are you happy with your choice?
Very happy.
Very happy. Okay, thank you. Isaac, what's your experience?
Yeah, so I guess somewhere in between. So I joined a little bit later, similarly to Peter. There was a smaller equity raise when the protocol was initially launching, and that was to kind of get the initial assets out there. When I joined, we did a private raise with investors, and then a Mesa sale. And Mesa, I think, is being rebranded into like a balancer auction thing. But basically, it's a bonding curve that allows people to put in bids at different prices. And similarly to what Said mentioned, it allows the market price to be set by the consumers, which is, again, quite a unique way. Similarly, the way we take money and then the way we set the price is also like community based, which I think is just a really beautiful way to make sure that there aren't a centralized group of actors making decisions again, which seems to be a recurring theme, but that it really comes from the audience, the people, that there's enough allocation there for them to participate. Fuse is also a DPoS, like delegated proof of stake chain, meaning that the stakers also are earning. So there are, I believe, like 96% of the validators are run and infrastructure are run by these other people from the community and participants, and they also vote and they also earn more. So theoretically, the ecosystem is still growing with, let's say, its security and these participants.
Well, investors are much more interested in what's going on with the company that way. I mean, they are as well with the public way to do it. Would you consider to go with the traditional way of fundraising?
In what sense?
Maybe in the past, would you rather do it in the traditional sense, or maybe in the future if you need more capital?
Well, I think there's always, let's say, more opportunities as the companies grow. And similarly to Ethereum, Fuse is a protocol. So we are actively talking to multiple projects on the Fuse protocol that are focused on and or building different business models or use cases. So it could be music festivals in Thailand, donation platforms in Spain, payment methodology in, Trinidad or Curacao or different islands. So each of these companies might go public in their island, might be a nonprofit sponsored by a government. They might also have a token. We actually also have a lending protocol similar to Aave that was launched that's actually focused on mid caps, because some of the other lending protocols really are focused and build a lot of really cool stuff. And I'm sure Mark can talk about this for institutions, whereas our communities might be smaller groups. And so the type of protocol and lending and the risk factors and the parameters are very different. So each of those projects might raise money in different ways, and we help support them and ideate with them on what's best for them. For a protocol, I think the way we did it is probably the way to go, if I can say so myself.
I'll just ask Mark, and then I'll leave you to Sergey. So Mark, I know that you said that you're not a company, but a protocol, but have you raised any funding so far?
So by a method that was that at some point had very bad press in 2018 and 2019, because we did an ICO in 2017. And I understand the bad press because 99% of the ICO went to zero. But a few of them actually succeed. So Aave was a 2017 ICO that raised to launch the Headland protocol, so the previous name of the Aave protocol, $17 million. And that money was put in good use to develop the protocol we have now.
Oh, sorry, I was muted. Sergey, the floor is yours.
Thank you, Catherine. Mark, when I heard your accent, I also remind my Moscow accent, and also you are reminding that I am representative of Ethereum Moscow. But as all of us now using that Ethereum platform, the DeFi stage is started from this Ethereum platform. Now we see that the market looks like somehow diversifies. We see that comes up the Binance Smart Chain. We see today CEO of Solana also understand that Polkadot or something like that comes up. Guys, what do you feel? Where that market, I'm talking behalf of the usage, behalf of the using of blockchain goes into, because so many liquidities, they are circulating between that blockchain, between that marketplaces, between the launch pads. What's your feel? Where do we go?
I can answer that.
Your turn, yeah. Mark, you can start.
Sorry, go for it, Said. Sorry.
Yeah, so I think where the market is heading is, I think there's going to be a lot of cross-chain activity, cross-chain liquidity. There's going to be a lot of chains out there. There's a lot of interoperability with bridges now. So I think the market is going to evolve into a lot of different chains. But I think at some point, some chains are going to drop off. And I think at some point, there's going to be a handful of chains that most people would use. So, I mean, there's still a lot of innovation. The actual blockchain networks still need to evolve, still need to develop a lot. Even Ethereum, I mean, look at Ethereum, it's had congestion issues and gas fees, etc. So it's going to take Ethereum a long time to actually come up with a solution. And I think the newer blockchain networks out there have had the advantage of hindsight, and they've had the advantage of seeing what the issues with Bitcoin and Ethereum was. and now they're building things that are actually much more advanced, much more flexible, much more upgradable on chain. And actually, I am managing director for the MENA region for Casper Labs, which is the company that built Casper Network, and I'm a big believer in the blockchain tech of Casper Network, and I believe that it solves a lot of the issues of Ethereum and Bitcoin. And there's still going to be a lot of blockchains that come up, and people say, oh, is Ethereum going to be the actual blockchain that wins? And my answer to that is it could be a blockchain network that comes out in the next year or two that actually wins. So, it's always better to spread your bets and hedge yourself. And I think if you're not invested in more than just one blockchain network, then you're missing out.
Thank you, Said. What I feel now, for trying to jump into some kind of DeFi project, you have to install MetaMask, and first of all, you have to choose the right network. Ethereum, Binance Smart Chain, or something else. Looks like that will become the next platform. Isaac, Isaac. The mic goes to your side. What do you feel? What's the next useful blockchain we should use? Because so many of them, so many platforms.
Yeah, so I guess I'm a little biased coming from Fuse, but I'll try to give a little objective. I mean, to be honest, and one of the reasons when I was joining Fuse, I bonded with the CEO, Mark. I really believe in a future with maybe not thousands of chains, but hundreds of protocols and different winners. I don't think of a winner-take-all future. I believe that each ecosystem is going to have different focuses. Even within the payment space, we have, Celo, we have XDAI, we have Fuse, we have, Rocket Fuel also taking a different approach than I'd say maybe some of the other crypto-only companies. And I don't think that if you use Safari or Firefox or Google Chrome or Brave, and when you go to send your emails, if you use Yahoo or AOL or Gmail, I guess most people consolidated to Gmail, but in general, different protocols, different infrastructures, different regions, different use cases. And I think the biggest change in you mentioned, changing your MetaMask. So there's a lot of improvements in the user experience for that, where oh, you switched to Shisha Finance BSC side, please change your MetaMask. It prompts you to do that, right? On our Fuse rewards page, we have PancakeSwap, FuseSwap, Uniswap rewards. Depending on where you are, it'll tell you switch your MetaMask, and it'll do it for you. In the future, I don't really care about packets and DNS and what the router is going for. I just want my email to arrive at the person I sent it. I want my payment application to work. And so while some companies might be focused on bigger financial transactions or security as the most important mechanism, others might be focused on infrastructure and user adoption, and not necessarily only about decentralization, but having access to this decentralized finance world. So I'm quite excited for connecting a lot of these different protocols and opportunities to Fuse and to the retail audience and people that we work with. And I believe in a future where many of the leading protocols who have been able to find product market fit, and unfortunately, many groups or companies focus more on marketing than actually people and users and product market fit. But the people who did will continue and in the future reap the benefits and stay around, last long enough to see retail audience and users come into those things.
Thank you, Isaac. Yes, Peter, you hear all of this. I feel that it's your turn now.
Yeah, well, I like to look back in history, right? Because blockchain is really an infrastructure. And if you look back at other infrastructures that were introduced, whether it was networking protocols, databases, all of these, or mobile phones, where others could build on top of it. It started out with many different competing infrastructures, and it consolidated. And what really determines it's the usage. It's the amount of people that are being trained and using this. And and so it's really hard to say where it's going to end up. I do believe there's going to be a consolidation. And I think just like with all the infrastructures I mentioned, I mean, we had BlackBerries, we had Microsoft phones, we had, what else did I write down? Nokia and all of that. You know, it consolidates to a few. And I think the same thing is going to happen here. The verdict is still out. It's very new. And I agree with, I forgot who mentioned it, but there could be a new one tomorrow. At the end of the day, who has the most developers and the most applications on top is probably who's going to have a dominant presence in the market. There's going to be more than one, that's for sure. I think 3 to 5 are going to define or own 80% of the market.
Thank you, Peter. Mark, your turn, because looks like the domination of our lovely Ethereum and a little bit failed now. What do you think about that?
What is very important is I don't believe in a winner-take-all situation. When I arrived in the blockchain ecosystem, there were like these common ethos saying Bitcoin and altcoin. Like you have the Bitcoin on one side and then the altcoin on the other side, and that's it. That was all the people used to see the world. A few people are still like that. They are like crypto boomers. It's okay. They don't evolve. But I think most people realize that, for example, Ethereum is not a threat to Bitcoin at all. It's another value proposition, and it's going to be a thing on its own, and both will coexist and thrive together. It's completely fine. And it's going to be the same thing. Like Ethereum killers doesn't make sense to me. I think that there are going to be different communities, different ecosystem, and all of them will thrive. What is important to me right now is that the Ethereum technology is the center of gravity of what happened in the blockchain ecosystem. Because when you look at the successful network that are outside of Ethereum, they use the Ethereum technology. The BSC, that's the EVM, that's Ethereum with a different set of rules. Polygon, that's Ethereum with a different set of rules, but it's the same technology. But that doesn't mean you cannot have new actors that do a different value proposition that can be interesting. I'm thinking, for example, of Elrond, Solana. They have like their own value proposition, completely different way to write code, and that might be interesting. And when we look at what happened in Web 2, traditional web, why I'm using, for example, not really myself, but most people in my country use Facebook, and most people in your country, Sergey, use VK. Why? We don't know. And why maybe Easter than you, people start using more WeChat, and maybe in Japan they use Line. Why? All of them, they are social media and people like it. You can create a profile and discuss. And why the creator of VK, when he launched a new platform called Telegram, I use it as a European and I don't use VK. We don't know. But what is important is that the technology find their own community and try from their community. And that's what is important to me.
You know, guys, what I feel that as in nature, we do not be on the edges. We have to be somewhere in the middle, and looks like consensus. We're trying to fit it somehow between all these platforms, between all behind of these blockchains. Catherine, maybe you want to add something. We have just 1 or 2 minutes left because we're not going to round it out of time.
Oh, well, then I have such a question that it probably required like answering it, but I think he just wants to just
let him to speak.
Yeah, it's a Deutsch coin of mine.
Not a coin, not a
yeah, Pomeranian. So my question is, because it's an investment panel in the first place, have you personally invested in any of DeFi products or maybe any other cryptocurrency projects?
Of course, 99% of my personal wealth is in crypto right now.
So you were using cryptocurrency to enter the project, or dollars or euros?
99% of what I have is crypto. I use as little fiduciary currency as possible. I pay my bill, I pay my rent, and that's it.
Wow.
Fair enough. Isaac, what about you?
I'm with Mark. Yeah. But if, I guess for a few years, you're taking salaries in USDT, DAI, crypto, and you want to support other projects, you can kind of do that much more easily. And fortunately, the opportunity to move back into traditional finance systems in order to pay rent or other stupid things that haven't caught up to crypto yet. We can, but getting, going back and forth. And I believe that it'll just get easier and more comfortable to have a portfolio based in crypto.
Fair enough. Peter, what do you think?
Well, I also have a part of my money, or if you will, assets in crypto. Maybe not 99%, but yeah, that's a personal choice. And yeah, there's no doubt it's going to go this way, right? And as someone said, as it gets easier to spend all these cryptocurrencies, that's going to make a huge difference. I think just here in California, a lot of people are sending money back to their countries, and they're going to realize how easy it is, no fees and all of that. It's going to make a huge difference when you can pay and move money easily. Or funds is a better word, maybe.
Saeed, how do you feel about that?
So yeah, when I jumped into the blockchain and crypto space more than 4 years ago, I sold every single asset that I had to get into Bitcoin and crypto. And since then, I've invested in more than 100 different projects over the years. And I find that now that I've really kind of got amazing returns, I'm starting to diversify out of crypto and into cash only and not to any other assets, because crypto is an extremely high risk asset class. And in order to balance out or diversify the risk, you need to go to the lowest risk asset class, and that's cash. I'm not a big believer in fiat or cash, but I do think that you have to diversify. So I started on 100% crypto, 0% cash, and now it's getting less and less crypto and more cash, but still a lot of crypto.
When you say cash, you say stablecoins like DAI, USDC, all these kind of things, or
no,
Bedrock cash.
Cash outside of the crypto, outside of stablecoins.
So Bedrock being eaten by inflation.
Yeah, I mean, stablecoins is being eaten by inflation, but if you stake stablecoin, then you get returns. Yeah. But still, you are taking a lot of risk when you are interacting with smart contracts. There's always smart contract risk. That's true. For me, cash is the safest asset.
Well, the majority of the panel answered that they would prefer to be able to pay for all the bills and to just actually to pay for everything in crypto. And according to a consultant firm report published just yesterday, everybody in the majority of people that are holding or hodling cryptocurrency right now would just dreaming about being able to pay for everything in the cryptocurrency. So you're not alone. Hopefully one day it will happen. I know personally that a couple of restaurants in Zug, Switzerland, are accepting Bitcoin, and there are a lot more. I think bars in New York, some of them, but it's just random places. And of course, Bitcoin is officially a legal tender in El Salvador, as I'm sure you have heard. So with that in mind, Sergey, we have to wrap it up.
Guys, what I got from this interesting and thoughtful panel with so distinguished people around, want to invest in DeFi, try to diversify. It's really cool to see all of you in person also. Yeah, I'm really happy to see you once more time. We have to go forward. We are on the final stage on our 2-day in a row DeFi and NFT Summit on the summer. Guys, I want to say thank you a lot. Say goodbye for now, and we are going to our viewers to spend our words for them.
Thank you so much.
Thank you so much.
Thank you for having us.
Everyone.
Good one.
again, and I think it's a final hello. Hi, hello everyone. Thank you so much for watching. We enjoyed having you as viewers, and we hope that you enjoy watching us this 2 days and received as much information as possible, and you're gonna implement it in your lives, projects, trading, and investments. So we're gonna announce the winner of our prize a little bit later, but for now, let me just remind you who we talked to today and who did their keynotes during the second day of the conference. So we had Valeria Minaeva, Anatoly Yakovlenko, Adam Chaplin, Dave D. Fire, Daniel Gerbatenko, Andrew Schmidt, Peter Jensen, Isaac Rodgin, and Mark Zeller. Sergey?
Yes, I want to thanks to all of our speakers for a very cool performance. It was really cool, and now we are moving on to an interesting part of our summit, which will all of you have been looking forward to. This is the drawing amount among our participants who have purchased a participation package named Exclusive. I will ask to our director to display the list of participants on the screen, and on side random.org, we're going to determine one winner in a random way. I want to remind you that the winner selected by the program will receive a cash prize, 1,000 USDT, from our generous sponsor, Daisy. Now we get ready, guys. We get ready to do that. Anthony, we're looking for...
Again, randomly choose the winner. We have 280 more. 287. An email that's going to receive the prize. Okay. We are generate button right now. Okay, number 92. Email is ssgrandson@iol.en. Let me just recap this one once again. The winner is number 92, ssgrandson@iol.in. So you have to contact our organizers to receive your prize. Hopefully you're going to be happy about it. I would. So congratulations for winning a prize. And Sergey, unfortunately, we have to go. We have to wrap it up.
First of all, I want to say thank you personally, because these 2 days, there are so many things happen, so many distinguished people around us, so many influencers and speakers being with us. Catherine, I would like to see you on a next event. Looks like this is going to be happening finally in this year. Define NFT Summit. This one is over. I want to say thank you to our viewers too. See you next time.
Thank you so much.
Not over yet.
Yeah, have a great weekend, guys.
Yeah.
Bye-bye.